Okay, so anchor points, pole trades, square ups. And while we're covering pole trade, we can cover break, hook, and go because it'll be part of that breakout trade as well. Um, Anything else? Anchor points and how to draw trend lines, let's say. And if you guys have any examples of what I corrected you on so that we can easily go back to that and already have an example, feel free to just let me know when we get to those subjects. Alex, did you have anything else that you still had questions on except anchor points, pole trades, break hook and go, square ups?
Let me check. Um, no. Bearish reversal pattern.
Yeah. So
Just like a quick I kind of know what it is, but not like
yeah,
100%.
so bearish reversal pattern is whatever. Like we're going up, right? We're going up in the price action. Like here, for example. You see my screens, guys?
Yeah.
Okay. I'll try to find something better than this here. Okay. Here's and I'll remove a few indicators here. I don't need volume. Come on. Okay, don't need. Oh, fuck. Okay. Julianne, the True MACD color is here. And by the way, Michael, you'll get to learn a few things about TradingView along the way, and I'll help you with that because he's from Forex, so we basically use MetaTrader 4 most times to chart. So you just type in MACD, and it's MACD split colors. And again, I take off the. You can change the colors, and I take off the signal lines. And if you have any issues with it, just let me know after the session or tomorrow, and I'll help you with it. But it's nice because it gives you a separate color for when it's the MACD's, the histograms above zero, and when it's below zero. And so that's easier when you do your divergences. Okay, that is one thing you wanted to know, right, Alex? Divergences.
What was that? Sorry.
Divergence.
Yeah.
Okay.
Divergence and reversal pattern.
Yeah. Well, so I'll show you reversal pattern. It's pretty simple. Now, there's a bunch of different patterns. Many of them are reversal patterns. We're not going to go through all patterns tonight. I did post a PDF today about patterns. The four very good ones. That's from Proact. That's very good, easy read. 17 pages on a PDF.
Did you
Very
post that in
clean.
the main chat, in the Trader chat?
Honestly, I think it was in Traders Chat, and maybe we should post it in educational as well.
Yeah, I'm
Uh,
gonna
I'll
check
do that.
that.
I'll do that. I'll do that later on because we'll get lost here and won't be efficient with the presentation.
Yeah.
But yeah, so just to get you the gist of what a bearish reversal pattern can be, it's you see it here, right? We're going up. This is forming what we call a rising wedge. Okay, so guys, this is a perfect example of where to anchor your lines. So this is correctly done. Now I showed the anchor points um, to you yesterday, Alex, but I'll show it to everybody else here. So anchor points are basically swing supports and swing resistance. So when we say swing high and swing low, that's a form of support and resistance. anchor points. So I'll show you a few examples here. And to start, so a topping pivot point or a pivot point on top, a swing high, is going to look like this. Oops, that's not what I want to use. Sorry. Hey, take it off. Now, I'm going to draw the easiest way and the cleanest way to see them, and I'll give you the criteria for what a pivot point or anchor point is.
So an anchor point can be also called a pivot point?
Yes, but a pivot point is only has to be 3 candles formation. An anchor point is really 5. So sometimes for your line, depending on the pattern, it'll be hard to find the 5 candle formation. Okay, I'll remove those to start. I'll show you pivot points. It's a good point. Oops. Wow, my drawing skills are poor tonight. Okay, so we're going up, we're going up, we're going up, and here we have a pivot point. That is a bearish pivot point, so then we would go from up to down. On these, every time you see one of these, right? So we have, for example, right, we have this area. Why doesn't it? Here we go. So this here is a pivot point, but it'll also, when I show you an anchor point, it'll also be an anchor point. But this is a pivot point, this is a pivot point, but a pivot point can also be an anchor point if it has the 2 extra candles on each side. So all you need for a pivot point to the upside is 1 candle higher than the one on the left and the one on the right. When we're going down and we're making this
does it require the actual candle body or the wick, or
it doesn't really matter as long as something's higher.
Gotcha.
Normally, like you'll often see them with the doji at the top if it's an evening star candlestick pattern. At the bottom, it might be just a small candle. There's different, more complicated ways. I'm just going to show you the basic for now, so that we at least understand what I mean when I'm talking about an anchor point and a pivot point.
Okay.
So here, basically, like, we're doing price action, we're going up, and then we get these candles. So that would be considered a pivot point. In this case here, we're going down, we get a pivot point, and then we start going up. Okay. Simple as that for a pivot point. So 3 candle formation. You can use those to draw your trend lines. And any point where you touch your trend line, you should at least have that. If it's just a random candle on its own and it doesn't give you that formation, or it's just completely going sideways, like a move of candles completely sideways, and then you draw an anchor on, like you anchor your trend line coming down on that doesn't work. And that was one of the reasons your wedges earlier in the mirror, I think most of your top lines, your top slopes coming down, we're doing that. It doesn't mean that it can't work, but you're likely to draw patterns that are not actually there if you always do it that way. So to continue with the anchor point, it's basically just adding another candle on the left and on the right.
And it doesn't matter like where it just has to be below the top.
Exactly. It doesn't have to be, like, sometimes they'll almost, like, the 2 on the right and the 2 on the left will almost be all equal to each other. but this one is sticking out, or this one is sticking out. Basically, as long as the one in the middle, in the case of a pivot point in this direction, is higher than the two on the left and the two on the right, you have an anchor point, an anchor support or resistance. Now, if we're going up like this and we get this anchor, what kind of anchor is it? Is it an anchor support and an anchor resistance? Someone want to take a
Anchor
shot?
support.
It's an anchor resistance because we're going up, right? So we're going up like this, making our way up, and then we do a swing, what we call a swing high as well, right? If you have the Pattern Smart swing high, swing low support and resistance indicator that draws a little dots on each of the swing highs or swing lows, same thing, right? That's how that program can learn to do that, or that algorithm, that little indicator. And same thing, if we come down, then we get a support anchor point. So if you're drawing a trend line for a pattern, and you want to draw like a slope like this, you need to make sure you are able to use that major candle in the middle as your anchor point. Okay, and there's going to be different ways to do that depending on what information you have on the price action, whether you use the wick or whether you use the body. There is no one way to do it. If somebody tells you to just use the wicks, that's wrong. If somebody tells you to just use the bodies, that's wrong.
Use the whole thing.
We use the confluence of indication. If we get 4 touches by excluding one wick somewhere along the trend line, that's what we're going to do. If we still get our 4 touches by using all the wicks lined up, then that's what we use. You want to be as inclusive as possible to not get any fake breakouts, because if your lines are too tight and you don't use all the price action and you're really putting it closer than it needs to be, you're sometimes you're going to get what you think is a breakout and it's not going to be breaking out, and you're going to take a lot of losing trades because of that. So that's what I mean when I say to look, and if you can't find anchor points, please at least a pivot point. So that's the gist of it. Does that make sense?
Yes, better now. I understand. So basically, if one forms, it usually means a reversal is going to happen.
Yeah, especially the 5, and it doesn't mean that a complete reversal of the trend is going to happen, right? Like if we zoom in on Bitcoin here, see here we have an anchor point formation. 1 candle sticking out to the top, and at least 2 and 2 to each side. Same like here, that's an anchor point. It looks a lot different, right? But the 2 on the left and the 2 on the right are lower. That's an anchor point. So let's say I want to start building my wedge here. This is the first line that I can start drawing. These are my first 2 anchor points. And they're like this. Okay? Now, then I have my low here. And then my next anchor point that would be in line without automatically going within my price action. Like I can do anchor points here. That would have been 1. It broke, but it didn't go that far. But there was other reasons for that at that point. And that's why we don't only use candles. We don't only use patterns. We don't only use the RSI to take a trade. We use all the information. We put it together. And when we think we have a high probability setup because everything seems to line up or close to it, then that's where we take our big trades. So in this case, we saw our first impulse move up. We moved sideways a little bit, created an anchor point that I can use. It is an anchor point. It does look different. And if you have a set of twins, or what we call like a bullish engulfing or close in reverse candles, twins, sisters, railroad tracks, tweezers, all sorts of candles that look almost exactly identical or equal, they can be counted as one. So as your main candle in the middle. Okay. But here, even if we do that, we still have 2 higher on the left and 2 higher on the right. So we can use that as an anchor point. Now I have anchor points that make sense. In this case, we took this trade live and we called it and all that. And basically, it was a rising wedge. So this, Alex, a rising wedge is a bearish reversal pattern. So what we mean by a bearish reversal pattern is any pattern that means that we're going to break down, or that has a high probability, maybe 70 or 80%. It's not 100%, but a high probability that we break out of that pattern to the downside. Now, we also have falling wedges. I don't know if we have any lately on. Well, okay, so we made a call, or I made a call on Waltcoin yesterday morning, I believe. Okay, so perfect example of a falling wedge, so opposite. So this, because it's a consolidation pattern going down, it would be considered a bullish reversal. So when we put bullish or bearish in front of our reversal pattern, Alex, it simply means where we think it's supposed to break out of. So in this case, we have a falling wedge, and the definition of a falling wedge is 2 lines creating a triangle heading in the same direction. If you have 1 line going up and 1 line going down, that is not a wedge anymore. That is a symmetrical triangle. So we'll go through the nuances of patterns another night or throughout the chat, but that's the difference. So a falling wedge is a bullish reversal pattern, which means when we break out of it, then we go to the upside. And the rising wedge is the opposite. So that's what we mean by bullish and bearish.
Okay, yeah, I understand much better now.
So this trade we took, and so this is a perfect example here, guys, of a break, hook, and go. So might as well. Are you all comfortable with the trend line aspect and the anchor points, guys?
Yeah.
So far, so good. I have a question.
Yep.
So on this descending wedge here, can you but before those, it's easy to see it now that it's been, because it's already been pre-drawn.
Yeah.
But I'm just kind of trying to think, where did you, how far to the left did you were you before you started thinking, okay, here's a wedge happening?
Well, pretty easy or early enough. I think I called early yesterday morning, and this is an hourly chart, right? So I was somewhere in here. But that's because I read the candles as well. So I could see that they were telling us they wanted to go up.
Okay. But what I actually meant is the actual formation of the wedge itself.
Yeah. So here it becomes pretty easy because we get at least these 3 lining up, or at least, and okay, so this is something I want to touch on, guys, too. There's new people in here, or even the people that have been with me for a while here. We teach you a lot of stuff, and we have a lot of tools that we work with. And if you really want to learn something, you can't do it all at once. Like, I'm going to show you a lot of stuff today, but if you try and go and practice all of those tomorrow, your brain is not going to be able to process this. So, and it's no fault of yours. It's just how the brain works. My teacher, who was Scott he was one of my teachers along the way, but Scott at Pro Traders, and he says it in the PDF that we shared today for chart patterns. He says, everything you learn in a chart, so whether it's a falling wedges or pole trades or square ups or engulfing candles, whatever the case might be, for your brain to be able to see it easily, you need to do it multiple times in a row without doing anything else. So what they had us do over there was if they showed us, for example, falling wedges and rising wedges, what we would have to do as homework to get good at that was to go in the charts in the past. Doesn't matter what chart, doesn't matter what time frame really. It's just to be able to train your brain and create what we call reticular cognition. So it's your brain to give the ability to your brain to easily see the pattern. It's a little bit like the experiments that they do where they give you like shuffled words and you can still read them. Shuffled. I'll give you an example. Okay, so all this for most people that have learned English and that have lived with English all their lives can read this paragraph without any problems, right? You can take a few seconds to try it out. Do you all see what I mean?
Yeah.
Yeah, absolutely.
Okay. So the reason you can do that is because you've seen enough words and your brain has seen them often enough that it only needs to have the first and the last letter in the correct order to be able to read the words anyways. And it's the same thing with charts. It's not that you're stupid if you can't read a chart. It's just your brain hasn't been trained to see it. It's not something that you go about in your life and just use every day. Nobody does that. So until you go and you put in the work and you practice it, or if over time you do see those patterns many times, you'll get to learn to see them. It's like the first time you try to draw a trend line. It's like, oh, well, you can't even see that there's a trend line there until you like right now for me, I can even call perfect fib retracement levels without even putting my fib on the chart. That's because I've done so many of them that I know it's a 50% or it's a 618 or it's a 786. And yeah, sometimes I'm wrong by one level. Hoo-ha. But yeah, so give yourself a chance. If you're going to go learn wedges tomorrow, go and do 300 wedges. That's the limit that they give us. 300 of each in a row in one session. And then guess what? You have to take a day off. The next day, you don't learn anything new. You can participate or try to paper trade, but really your brain needs a break to synthesize. It needs 24 hours to synthesize that much information and to store it properly so that it can be accessed later. So when some of you, and I've seen a lot of people, and even on other servers, I see people that think they're going to become traders in 30 days. Impossible. Impossible. Because if today you're doing 300 wedges, it's going to take you a few hours. You have a life to live, and you have other things that you're doing. And then you need to take a break and wait 24 hours. So let's say just to learn, if there's 30 patterns to learn, and those are just patterns, it's going to take you 60 days. And if you want to learn candlestick formations or how to draw trends or anything, it's going to take you all that time if you do it right. But if you don't listen to me or the ones that have done it, what you're going to try to do, and that's what we see most times, is you're going to see our charts and the things we do after 15 years of practicing, and you're going to think, okay, what's a wedge, and what's a pole trade, and what's the RSI, and what's a divergence, and what's a square up, and you're going to try to jumble all that together, and you'll be a jack of all trades, master of none, is what I call it. Right? You can't do it all and learn it all in one day. So if you don't want to do it right, do it one at a time. It doesn't mean that we can't show you a bunch of things and then you go practice one at a time and then we review them later. But if you want to make your your learning process efficient and effective, that is the way to go about it. And if you don't put in the work, I can try to help you all I want. You're not going to get there. So you have to be able and willing to work. So wedge, to come back to my wedge, sorry about the rant, guys. But here I can see a clear 1, 2, 3 here, just because I can see it. Now there's a few different options here, and sometimes you have to try a few different things. But in this case, this seemed to be an exaggeration. So what I'm going to start by doing, why is it so slow? Okay. Right, so I just need to anchor these together. They're perfectly lined up. No wicks stick out, no, like I'm including everything. That's pretty clear, right? But then I have 2 clear touches here that I can go get if I just cut my wicks a little bit. So instead of getting 3 touches, I get 5 touches. And it's not like I'm leaving anything drastically out of the price action. And by the way, guys, a bottom slope of a falling wedge is not your important part. The most important part is your top slope, because that's where you're trying to break out of. If you know that you're in a falling wedge, you're not going to look for a breakout trade to the bottom. That's not where your probability of success is. So, yeah, you can be finicky about how you draw it, because it's going to impact where you get your squeeze, where it's likely to have to force a push out and a breakout to the upside. But if you're off a little bit, it should change it drastically. Your top line is going to be where it's more important. And the same thing for a rising wedge. On a rising wedge, like we had on Bitcoin earlier, your top line is not that important. It's the bottom slope that you want to make sure is accurate, because that's what you're going to use for your breakout and your break hook and go. So I'll redraw my line on top here. So here there's a few ways. So if you start right now at this point and you do this, you're too steep. And I have a point here. Come on. See, I don't even know if that's exactly how I had it earlier. Something like that. So yeah, it's really all lining them up. Sometimes you'll use the wick and it doesn't make sense because it's too steep and it cuts off. Like if I did this, it cuts off a major portion of your and so here in Namir, this is a good example of what's probably not a falling wedge. Okay, it's okay you get 2 anchors and here you have 3, but a line with only 2 anchors is a tentative line, and it doesn't have as much strength as a line that has 3, 4, 5, 6 touches. So you're more likely to have a false breakout and then have to bring the price lower to find more buyers before they can move up on a line like this that only has 2 touches, and if you had something that they hit and resisted on like 5, 6 times. So I don't know if that helps where you draw it. And
that helps a lot. Can I ask you another question?
Yeah.
So as you go on, you get a more refined view of your wedge.
Yes.
And so are there any like rules of thumb about, readjusting your wedge or anything?
I always say
any mental traps to avoid?
Yeah. So I always say, ask yourself, am I trying to adjust this wedge in order to force the opportunity to have a trade? Like if you're just modifying your line to try to create a trading opportunity, then no, don't do it. If you have a bias, you think, oh, I think Bitcoin should go up, and then you go to your chart and you chart some bullish patterns, then that's probably wrong. It doesn't mean that you can't have a bias, but go to the chart with the blank slate, draw objectively what is there and what the chart is telling you, and then and that's why I say, like, I don't care. Yeah, of course, I would like cryptos to go up and succeed. But when I go to my charts, if I want to be really objective in what I draw and be accurate most of the time, I can't go to my charts with a bias. I need to get there and not be looking for a trade. When people tell me tomorrow I'm gonna come here and I'm gonna trade, that is wrong. If you go to the charts wanting to find a trade, you will find one, but it doesn't mean that it's going to be a good trade. Go to the charts trying to convince yourself not to take a trade. And the moment you can't do that anymore because it's so the evidence is so overwhelming that it's a good setup, then take your trade and press that winner. Press that, build it up, scale in, and then once you hit your targets or it makes sense to get out, get out. But that's what I say but don't be scared to adjust it, because sometimes you only have a few points at first to draw a line. It's better to have it on than not have it on at all and have somewhat of an idea of what's going on. And then if the charts of the market speak to you and they provide you more proof that you can use, don't be scared to admit that your line was wrong. Maybe sometimes you made a mistake. You come back to your chart an hour later and you're like, what the fuck was I drawing there, right? It doesn't make sense to you anymore. If you think you made a mistake, correct it. Or if the chart gave you new information, which happens every candle, or if you think that you should modify it for good reasons, then I do that all the time.
What about that's really good, man. What about the opposite of that? Like, I think I've done this to myself where I've talked myself out of a trade. So, for example, I'm just trying to think of myself in a bad state of mind and looking at, see where it's breaking out of the wedge, that first green candle that's breaking out.
Yes, here?
No, even to the left of that.
Oh, yeah.
Okay, so one thing I could see myself doing foolishly maybe is trying to fit that, like refit the wedge to include that. What would it take to convince us that that's not happening?
Well, so first of all, we don't combine just the break, right? So I can show you multiple examples, but maybe we haven't covered those things. I can show you why I think we would be breaking and maybe not in these areas. But look at here when we hit our bottom slope for the last two times. You're familiar with bullish engulfing candles, right?
Yes.
Okay. So we hit the line the fourth time. See, 1, 2, 3, and even if you count this wick, we would have gotten 4 touches, 5, 6. But when we touch it this time, we get what? A pivot point, an anchor point, and a rejection wick, and a bullish engulfing candle. Now we make it higher, and they can't break it yet, so they come back and when they bring it back, they're just trying to find more buyers. So they're making the price more attractive to try to gain enough momentum in buyers to push it out, right? That's all they're doing. So when we get back here, what do we do again? Another rejection wick, another bullish engulfing candle. We go up a little bit more, and here we get another anchor point. It's harder to see with a morning star. Morning star is a big bearish candle, a doji or an indecision candle, and then a bullish candle. That is a bullish reversal pattern. So I'm getting all these signs, right? Now, what else do we get that's not on my chart that's normally there at the bottom? Do you see something missing at the bottom of my chart?
Something missing at the bottom of your chart? Like where?
At the bottom.
What, your signals?
Yeah, my indicators.
Yeah, your indicators.
Okay. So
the resistance.
Yeah, so here, first of all, if we had done our complete work and analysis, what do we look for as, and by the way, PSRs, guys, for you that are new, when I use PSR, that means previous support and resistance. So I'll show you that, might as well. So here we made a big move up, and now we're pulling back. We're making a retracement. Now, I'll take away that fib here for now. So first of all, we have our fibs that we're missing. So I fib from the bottom of our move up to the top, okay? And then now I have my my indicators, and I have my MACD. Now I'll put it back on the 4-hour because that's usually where we'll look for ultimate indications of that. So here at the bottom, they look even bigger. My bullish engulfing candle. And what I wanted to, I have one more piece that I'm going to add just to add confirmation to that. But we can see our RSI starting to turn. So it's trying to make newer lows, but it's not making newer lows. Same thing for the MACD. We're getting what we call bullish divergence. I'll try to go on a 1-hour.
Right.
And what we're missing as well is when we come back, so we make an impulse leg up or move up, whatever you want to call it, we make a pullback. So if we want to find our PSRs, our important levels of support and resistance, when we have a move up and we're coming back, we're looking for supports. Now, if you want to find your supports, what you need to do is you need to go in the past before this move up and look for your resistances, not your past supports. Now, sometimes it just happens that some of the supports will line up with the resistances, but you have to look for your resistances. So the phrase to retain here is past resistance becomes future support. And if we would be going the opposite way around, it would be past support becomes future resistance. If you don't think you'll remember, write it down. So past resistance, I'll show you an example. So we go here, we have a clear high here, and then we have 1, 2, 3, 4, like 5 touches if I put one here. See, 1, 2, 3, 4, 5. Was that resistance, you think? Yes. Yeah. Now, when we come back, is that going to be support? Yes. So if I move, where's my line? Is that close enough for you guys? Now, by then, I know that we've made it to at least the 618, and we almost wicked on the 786. Now, how often do we see pullbacks to a 618 being complete and reversing? Very often. And if we get to the 786 and we've reached major support, which we see it can't cross, it's trying, it's wicking through it, and it's closing close to it, but it can't close through it. So we know that that's an important part. And if we had done our homework and drawn this before, you would know that ahead of time. And if you were in a short, you would have known that this is the area that you want to get out and take your profits. So then if I put back my my indicators, it's hard to see on this. I don't like this new one here. It's not putting the humps as big. By the way, for you new guys that don't know how I use my MACD, I don't use any signal lines, any moving averages, and any MACD crossover, all that jazz. You can use moving averages, but using them by themselves or a MACD signal line, first of all, moving averages or any indicator, they're all lagging indicators. So that means that if you follow them, you're late. You're late to the party all the time. The only thing that can lead, so be a leading indicator, is divergences between your indicator and the price action. And a divergence, if you look it up, did you read the article, Alex, that I sent you?
What about RSI?
Yeah, that's the same thing. If you trade only on the RSI being oversold or overbought, you will kill your account. And if you kill an account and try it again, you will kill your second account. I guarantee you that. So I take off the MACD. All I keep is the histogram. And all I'm looking for is the humps. So the humps of the histogram. So you see here, we're making, and I'll try to show you this so it's easier to see. But you see, we make this low and we make this low. So I'll line them up with the MACD. I'll remove this for now. Okay, so these are our two last lows that we want to compare. Now this low made a slightly lower low than this one. And this hump here is lower than this one. So you see what I mean, Alex, by divergence? A divergence is a difference. So two things that should be doing the same thing, but doing opposite things. That's what's called divergence. When they move together in accordance, so all in the same direction as they should, that's called convergence. So in this case, for example, we have these lower lows, right? We see our trend line still sloping downwards, but here we're making higher lows on our indicator. That is the only form of leading indicator you can have. And it's not even an indicator by itself. It's just by using the price action versus your indicator. That's what creates divergence. And if you get divergence, it doesn't mean the end is here, but it means it's near. So you got to start being careful. Or you got to start maybe keeping an eye out on a breakout. And here, not only did we started making higher lows, but eventually, even if we weren't pushing up in the price, we were starting to see good bullish momentum, positive momentum, add on our MACD histogram, right? So those are all indications, including all the MACD, the candle reading that I showed you earlier, the important massive support, the fact that we've pulled back enough, right? We're not only at a 382 pullback, we're in between a 618 and a 76. That's a significant pullback compared to the move we had done. So all those things put out together are signs that I'm confident we're about to break out. All that put together, and you know me, I don't make a call if I'm not confident. So when I put that in Traders Chat yesterday morning, those were all the reasons. Now, we weren't even broken out when I sent that out. I said, well, look out for the break of that line. Now, that is a smaller pattern within another bigger possible one that I had drawn earlier, but really the line is not, I don't even know what it's doing there. This drawing is used as an alert. I don't know why it's, yes. It could have been drawn with those 2 points that you could have drawn early, but you see how quickly this gets negated? So I know it's not even there. So I didn't even worry about that. So here, to go into something else, does that all make sense so far? Do you have any questions or? Guys, are we all good?
Yes, sir.
Okay. So yeah, so since we have a good breakout here, here's an example of, and the new guys, Alex, this is something that's gonna, if you do it right, this is gonna improve your trading by tenfold. just this, because you'll be able to use this all over the place. Even Michael, I don't know if you've seen this before, but if you're a breakout trader, I know you do the double top breakout and all those things. This is something that will cut down on your losses. It'll prevent you from being head faked all the time. So the breakout just happening and for the price to just come right back down and hit your stop loss. So this is a way to cut down on your losses. And often you'll even get a better entry price than if you chased the price up when it first breaks out. It almost always pulls back. Okay, so I'll drop it down. So we know we have a breakout, right? So I'll drop it down, let's say on a 30-minute, just as an example. Okay, so this is a perfect example. So to have a breakout, first of all, you can't only break out and still be within your current candle that hasn't closed and then come right back in. If it just wicks out and comes right back in and closes back into the pattern, that doesn't count as your break. If that happens, then you need to break and close out of it a second time before you can start your break, hook, and go process. Now this one is clean, so we get our breakout candle. It closes outside the pattern, and then we get what we call our hook. The hook is coming back to whatever line you broke. So in this case, we're playing a bullish reversal of a falling wedge, but it could be a horizontal line, it could be a double top, it could be a symmetrical triangle. Doesn't matter what it is. Whatever breakout trade you're doing and whatever line you're using to do your breakout, that is what you need to come and retest. Because this was support, it was resistance all the way, as we saw earlier, maybe 4, 5, 6 times. So we want to make sure that they don't just break it to go get potential buyers and kick out stop losses and then just come right back in. So what we need to do is we need to make sure after they break out that they use this line as support now. So the way we do that is we wait for it to hook to the line. Hook just means to come back to the line you broke out. And then after it's completed that and it closes on the line, close to it, or goes and touches it and closes a little bit above it, as long as it's close, and you'll get better at judging those. There's a bit of an art to it. Like this one is slightly within the line, but it doesn't mean that our line was really exact either. So we can't put too much exactitude in that. It's still a very clean one. And then we get what we call our go candle, which is in this case a bullish engulfing candle. So that's your break, your hook, and your go. Now, some people that are more aggressive will start entering the trades here with scout positions, and we have a video on scouts in the educational section, and I'll cover those later if that's not enough, but it's pretty simple. You take a small position, a small increment of the total position you intend to build along the way in your total trade, and you start at a better entry price. And if it doesn't end up working out, you only lose on a small portion of your trade. If it ends up working out, you have a trade here, then you have maybe a trade on the breakout, then maybe you have a trade on the break, hook, and go, and whatever. If it gives you another bullish consolidation pattern like a flag, you can go in again. But the real easy way to start when you're just starting is to wait for the break, hook, and go. And you wait for the close of the candle. Because if you enter here when this candle passes this red candle, but the candle is still open, it can just, by the end of the 30-minute, come right back in and you're stopped out. And you have an extra losing trade. So wait for your trade, wait for the candle to close, and then you can come in at this high here, at this candle close. And that still leaves you plenty of room to go. Now,
so normally you don't submit the buy order until that first go candle has closed.
Exactly. Unless
and you do it kind of fast then also.
What?
And you do it kind of fast then. It's kind of a...
No, not really. There's plenty of time in there. Right? like just this here, because we're using a 30-minute chart, means that from the time it breaks, you need at least an hour and a half to get the full break hook and go, right? At minimum. In this case, because it didn't hook back in one candle, it took 3 candles to complete the hook and retest, and then gave you another candle to go. That's 1, 2, 3, 4, 5. That's 2.5 hours. So when people tell me, "Oh, James, the Litecoin is breaking out," or let's hurry up, we need to go see the chart. No, you don't. There's no hurry in trading unless you're a scalper, and you're no scalpers.
But I'm talking about after the close of that first go candle, right?
Yeah, but look at what it did. It even gapped down here for a while. And often enough, what you'll see is because these aren't the correct fibs that we need to use for the breakout. Those were the fibs that we were using as support, right? Remember this? So what I need to do, and people ask me that all the time, when should I add my fibs for when we break to the upside? Right?
Okay.
Well, once you know you've found support and that you're now looking for the breakout, or the breakout is happening, then take out your fibs here and then fib from top to bottom. And for those who don't have our fib settings, I'll give it to you. We have special fib settings. They work awesome. They save you time. So that's what we do. Now, if you want to be conservative, the wedge is really here, right? Oh, come on, go out. Right? The wedge is really here. So if you want to be a conservative trader and not push your luck, what you can do is you can just fib the wedge itself. Okay? Nothing wrong with that. And the target of a falling wedge or a rising wedge reversal pattern is the 618. Now, sometimes will we finish at 50? Yes. Can you move up your stop loss as it crosses each fib? Yes, and you protect your profits, and that's fine. Some people will take out half of their position, take half of their profits here, and then they'll target the 618. Some people will divide it in 3. They'll take some here at the 618, and then they'll let the rest ride in case we do this here. But a lot of them will just go and hit the 618 and then stop and drop dead. You've seen enough of those, right? The ones that have been with me since January or whatever. And the other thing that you can do is you can do your fib from there, which is also okay because you're fibbing the whole move down. And even then, the 618, we reached within an hour after getting our go candle. And I can guarantee you, if we even go on a 10-minute, you had plenty of time. Now, unless you're really, really slow at entering your orders, and by then you're not entering a limit order, guys. You can use a market order, right? You've gotten all your criterias. You know that you can. You're okay with the price. Your break hook and go is complete. You can click market order. So it's quicker. So the time is not too great to put in your order. But even on a 10-minute, we got the break, we got a hook, but that hook came back into the pattern. Then we broke out again, got a hook right on our line, did a pivot point, even an anchor point in this case, and we got our first go candle here. But if you weren't convinced about that in a 10-minute, you could have waited for this one. And then look, you have an extra 10 minutes for all this here to get in.
So for this trade, you would definitely have used the 30-minute candle.
I for break hook and goes, I'll drop as low as a 10-minute. You don't have a 10-minute unless you pay. You have a paid version of TradingView. If you're not sure and I'm around, ask me. If not, go to the 30. The 15 and the 5 minutes are the worst chart to trade on. So I would say try to steer away from those. But you saw in this case, the 30-minute is perfectly fine. And we, when we first started teaching those to you, we even stayed on the 1 hour, right? It's just that sometimes you won't see it on a 1 hour. It'll be like within a candle and it's not as defined. So you miss it and you don't think there's a break we can go, but there is one in a smaller time frame. But if you always go to 10 minutes, sometimes you might get more false signals too, right? Because those candles have less significance. So it's kind of a balance that you want to have, and you want to get used to being able to correctly identifying a break hook and go. But yeah, I often drop on a 10-minute, especially if it's like a 1 hour breakout, like a 1 hour pattern or a 1 hour chart that I charted on, and then I want to get an accurate entry. That's what I'll do. But either way, right, we're still entering in this area, and within 1, 2, 3, 4, 5 candles, 5 10-minute candles, 50 minutes, we're at our target. Great trade. This is basically 8.5% in 50 minutes. If you trade with leverage, it's even greater than that, whatever the case might be. But I mean, there's nothing wrong with such a trade. So
I had a question. So before that push up, what was happening before that? Was it on an uptrend? Sorry, I just came back, so I wasn't.
what do you mean on an uptrend? No, we're in a falling wedge. How long have you been gone?
Oh, sorry. Oh,
Yeah, it's the same
I don't
trade.
know. I've been gone for like 10 minutes. I thought we were talking about flagpoles right now.
No,
Sorry.
no, still falling wedge. Just showing. Did you catch any of the break hook and go?
That you just said right now?
Well, I've been talking about the break hook and go for 10 minutes.
No, I was gone.
Okay, well, do you want me to like?
I mean, I could see the formation. It's just I was wondering because like when I watched that video you sent me, it was like for that to happen, why would it go up? Wouldn't it go down if we're in a downtrend? Why did it go up?
But
Because
a falling wedge
the
is
falling wedge is a reversal pattern. That's
Okay.
why you asked about why it's called a reversal pattern. Because it's a reversal pattern. See, we're going down.
it's a consolidation.
We reverse. We reverse the trend. So that's why it's called a reversal pattern.
Yeah, but the flagpole.
Yeah, but the flagpole is not a reversal pattern. You're mixing two things up.
Okay.
A flagpole is a continuation trade.
Okay, yeah. All
Yeah.
right, never mind.
Yeah, but we'll get to that, and we'll be able to use break hook and go on that too. But anyways, so we had our break hook and go. Do you know what the break hook and go is? I can show it again quickly.
Yeah, I know what it is. Yeah, it's just like it confused me because it's supposed to be in a continuation trade, not a reversal. You know.
No. So like I said, break hook and go it needs to be used on every type of breakout trade. If you want to minimize your losing trades and often have even better entry prices than if you chase it up after the breakout. You see here, if you panic and you get in here, first of all, if you put your stop loss too tight, or you're not willing to sustain a temporary loss, if you can't handle it emotionally or psychologically, you're going to enter here because you think the price is going up. You're going to chase it. You're going to FOMO, whatever you want to call it. And then it's going to do this because it almost always does the hook, which is why we wait for it. Okay, so we have a confirmed breakout. It hooks. We know it's going to do it. We expect it. And some are going to say, what if it breaks and never comes back? Too bad. It goes without me. I'm going to go looking for another trade. There's plenty of other trades. I'd rather not take a losing trade and lose any of my trading capital, my ammo to make money for a living, than to take a chance and FOMO into something that I'm not sure of. That's gambling. So I wait for the hook. It gives me the hook. It retests and uses the line it broke out of as support now. So previous resistance becomes support. And then we get our go candle, bullish candle, and we enter. And if we checked on the 30-minute, it was still there, we get our break. Takes 3 candles to hook. So that's what I was saying to the group. There's no hurry in a breakout trade. If you see anybody saying something's breaking out and we need to hurry and go check the chart, tell them to shut the fuck up. No reason to do that. No reason to panic.
Does it always touch the resistance line, I guess it is at that point, again before it hooks back up?
Yeah, so that's the hook. Coming back to retest is the hook, and that's what you want to.
So for a correct sign there, it always has to retouch that line.
That's what we do. So if you want to say, James, I want to trade with less losers, I want to cut down my losers, and I often want to get a better entry price than if I FOMO in right here, right? Do you get a better entry price if you get in right here, or just off the first candle that gives you a go, or do you get a better entry price if you go there? Get a better entry price if you wait for the pullback, right? So not only do you reduce your risk because you now know that they're now going to use this line as support now, your stop loss can be very tight because now you know that they're using this as support. You normally get a bullish engulfing candle, which by itself is also very bullish and can act as a support if ever we were to turn back down. So you can put your stop loss, whatever, like a little bit below that, and then your reward is all the way up here. That's.
Have you ever done that? Stopped out and then realized it is indeed going, and then replaced your order?
Yeah. If it gives you a real break hook and go, you'll get some that don't work. Even if it was a textbook break hook and go, it happens. There's nothing in trading that's 100%. So everything that I'm teaching you, you will all have losing trades, even if you follow the rules and all the strategies perfectly. That is going to happen. If you can't handle losing trades, don't be a trader. That's not going to happen. But what it can do, though, is let's say you follow all the rules and for some reason it doesn't work and it comes back within the pattern. Then just reanalyze it again, check your RSI, check your MACD, check if you're getting support again and all those things. And if it breaks out again, wait for your break hook and go and do it again. But see, if I do this here, okay, I'll show you the setup. Come on. Even if I enter at the end of the 30-minute candle, I put my stop loss just below the bullish engulfing candle, and I target the 618, I get a 3.38 reward to risk ratio. So that means if I do this trade 3 times, the same setup, I can lose. I only have to make one that's a winner to 3 losers. Now that's how you make money in trading. And these things, your risk to reward ratio, your stop loss, and your target, you should have, if you're going to take a trade, you should know these ahead of time before clicking the button. So, and it doesn't mean that it can't be modified. It should be modified other than if there is something on the chart that tells you and gives you clear evidence that you should be making that modification. So for example, if you see that we reached the 50% fib retracement and we're way overbought already and you're seeing bearish divergence or whatever, click out even if your target is here, or at least move your stop loss up and maybe scale out of your position, take 50% off or whatever. But even with that, even if that happens, I know that by taking a 3-to-1 setup, even if I don't reach my ultimate target right to the level or to the penny, I still have a good setup. And that's why usually if you're going to take a trade, you at least want a 2-to-1. And I prefer aiming for at least a 3-to-1 and 4, 5, 10-to-1. You've seen me set up plenty of trades that have 8, 9, 10-to-1 ratios.
At what point do you draw this? When it's hooking?
No, you'd have. Well, yeah, you can plan it ahead of time. Like as soon as this candle starts, and I see that it's starting to be bullish, right? I can start building this because I know where my stop could be if this candle finishes to be a bullish engulfing candle. I already know where my fibs are, and so I could already build this out. Now, the only part that'll change is the exact entry, but it shouldn't be too far off that it completely screws up your reward to risk ratio. Just give me a sec, guys. My Forex trades are all moving.
Don't FOMO.
No, I'm in a bunch of trades. I'm just managing them. I'm in like 10 trades right now. Maybe not 10. Okay. Yeah. So always at least a 2-to-1, if not a 3-to-1 or more. So that gives you leeway. If you have to adjust things slightly, you're still above the 2-to-1. And if you're taking 1-to-1s or less even, you better be a damn good trader and have a high win rate because you're probably going to lose money if not. So I think that covers it. In this case, you see we went much higher. We went and wicked right on a double top. And then we went closed and tried to break again through the 886. And then we fell back down. And we could predict that we were going to fall back down. Where are my indicators? RSI. Oh, fuck it. Changed all my settings again.
So this is a trade that played out over, at least a week on the descending wedge, which is great. What's like the shortest time frame that you personally feel comfortable making trades, like setups?
Doesn't matter. So I chart mostly in the 4-hour and the 1-hour, right? So just by using those time frames, of course, the setups, so the consolidation periods, the breakouts, they'll all be longer than if I would be setting up things on a 10-minute, right?
Yeah.
I'm not sure though if I understand your question thoroughly.
Well, that descending wedge took place over what, like a week or something? I don't remember, but
we can check that.
But it was something that you can, really get a very clear indication of what's happening.
Yeah, 4 days and 3 hours from the top of our line to our breakout candle.
Yeah.
But see, what I do, I don't worry about those, and I don't. After I've been able to draw it, and I'm confident in it, even if it's not completely accurate at first, what I'll do is I have access to alerts, right? So I'll right-click on my line. I'll add an alert. Okay, crossing up WTC once per bar close for the next month. And I do that. And so I can leave this chart, and once it crosses a candle above it, it'll alert me. And of course, because I've done thousands of charts like these, I'm quick enough to come to my chart and I can chart a chart in 30 seconds and be ready to take a trade if need be. But even then, normally, even if you drop on a 10-minute to get your break hook and go, it still will take at least another 20 minutes or 30 minutes for you to get your break hook and go, right?
Yeah.
There's 2 or 3 candles left at least. And that's if it happens right away. Like one candle breakout, one candle hook right to your line, and a retest, and then you're go right away. But sometimes it takes an extra candle or 2 or 3. Sometimes it'll break out. Who's running water?
Oh, my fault.
Okay. Yeah, sometimes we get a breakout, and it just rides along the line, just meandering down, and doesn't give you a go. And all of a sudden, it'll give you the go candle, right? Well, that can take an hour if you're on a 10-minute. So that's why there's no real hurry. So that's what I do. I build the patterns.
It can go
I move
sideways
up.
too, right?
What?
It can go sideways as well, couldn't it?
Yep. It's rare that they go sideways, just because of the geometry and structure of the pattern.
Okay.
Right? It's been accumulating for so long and becoming so cheap that when it normally breaks, they'll come retest, and sometimes they need to come back a little bit further down to find enough buyers to push it up. But usually you won't see them. If you drew your wedge correctly, sometimes the problem with people is they draw it too steep or whatever. It's not really the correct wedge. And then it breaks out of their pattern, and then it moves sideways like this.
Yeah.
Right? But really, if they would have drawn it right, it would be within the pattern. So often enough, if you see that off your wedge, if you have a steep and pointy wedge, and it breaks out to the side, go back and ask yourself and relook at your wedge to see if it's really drawn right, because that's probably a good indication that it's not. It doesn't mean that that's the case all the time, but often it will be. But still, gives you plenty of time. And yeah, so break hook and go.
I had a quick question. I remember you talking about having one like good trade versus 3 bad trades. What was that about? Like adding to your trade?
No, it's just a reward to risk ratio.
Oh, okay. Because like I see people like this is for Forex, like they're like following like a trend or something, and they keep adding to their position.
Yep.
Do you know how to like manage that?
Yep. We call that scaling in, scaling out. Scaling in is adding to your positions in small increments.
Mm-hmm.
And then scaling out is coming out of your position, closing your positions in smaller increments.
But why not like do a bigger lot size, for example? Why do smaller?
Because if you lose big right away. You go see the video about your scout policy. The scout policy, it's a ProAct video in the educational section.
Okay, I will definitely check it out.
So I'll give you an example here. If you want to be aggressive, and there's many reasons why you could start entering your trade even before the breakout. I covered those earlier. But if you do, you take what we call a scout position. You don't put your full lot trade or 2-lot trade here, because you're not. The chart is not even showing you that you are correct so far, right? You're anticipating and you're taking an educated gamble, an educated guess. Now, if it wicks you out and you took your whole full position, you make a full loss, right? Now, if you only take a scout and let's say 1/3 or 1/4 of the total position you intend to put in the trade, yeah, you'll make less on that specific position when it does start going up. But when you lose, your losses will be so small that they won't even affect your trading capital. And your trading capital is your tool. If you want to become a successful trader and live on it, you can't afford to lose 50% of your capital and next week start trading on 50% of what you had the previous week. You're going to be eating breadcrumbs the next week, right? It's going to be a lot tougher to make your paycheck.
Or
and
Taco
make
Bell.
your
That's
living.
me.
What?
Or Taco Bell.
To Taco Bell.
Yes.
Hey, so largely for the scout position, so it's just something that you would close at like the top of the break. Or
No, I keep the scout.
You keep okay.
The scout stays in until I get out.
Okay, it has an advantage because I had an early entry, like a lower.
Yeah.
I
So
see.
yeah, and so what it does is it lets you sometimes take more aggressive chances or start building your trade earlier because you're not taking a big risk. If I want to put, let's say, $1,000 worth in this whole trade,
I see.
I can put $100 here a few times. One here on this bullish engulfing, one here on this bullish engulfing, one here on this bullish engulfing, one here on my break, one here on my hook and go. And then if it breaks out and goes quickly, maybe I don't have any other opportunities to put more in. But if it comes to my 236, my first fib, and it gives me a bull flag or just a sideways consolidation, I can enter another trade on the break of that. That could be a pole flag trade. We'll show you some of those. But basically, a pole flag is something like this. So we're making the price up, and then we start making things like this here. Okay, that's a pole flag. Now, when you see those formations, that is called a continuation pattern, which means here they've made an impulse move up. Some people are selling and some people are jumping into the trend move. So because you have a lot of closing positions, so they also call it accumulation and distribution areas. There's multiple ways or many names to call them, but basically what you're going to do on that is you use your parallel channel. You draw this like that, and if it breaks, what do? Break, hook, and go. Same thing. It's a break of a line or a pattern, break, hook, and go. So what do we need? We need a break, hook, and go. We need to do this, break, close one candle out of the pattern, hook to the pattern, and close at least, touch it and close above it, not within the pattern, and then a bullish candle.
If it closes in the parallel lines, it would be invalid. It would not be valid.
If what?
If the candle closes the hook, if it closes back in the channel, the two parallel lines,
Yeah,
it wouldn't be valid.
exactly.
Okay.
If that happens, then it, like, for example, if we,
But what if it like wicks to it, like the wick touches it?
that's okay because it's not, if a wick wicks in, that's
Mhm.
not closing in, right?
Yeah.
It's still going to close out.
Okay. All right.
Now, as long as the body doesn't close as well in the pattern.
All right. Got it.
So you're just looking for your close. Doesn't matter if it wicks through it. If it wicks, of course, often they're going to try to wick through it because they're testing that previous resistance now as support. So they need to test it. They're not always just going to stop on it. It's often going to wick through and close back up above. And if it doesn't close back up above and it closes within the pattern, then guess what? You need to do another break, hook, and go.
Okay.
But that's the pole on the upside. Now, 80% of poles approximately break in the same direction they came in. This is an easy trade, and you can see those all over the place on 1 hour. 1 hour. We had a few on Bitcoin going down in the last day or so.
Isn't there currently one right now?
Yeah. Now, don't mind my thing here, but let's say it's like this. That's still a pole flag trade. I call this a bull flag. So it's just when it's slanted a bit it means that it's still doing accumulation distribution. It's doing some consolidation, but it's also making the price more attractive, right? Because it's coming back down a little bit. So that's making the price more attractive to new buyers to force people to come back into the market and push it upwards. Now, those two are bullish continuation patterns. Now, the way we do it because, I covered earlier the wedges. Well, wedges, you're going to target your fibs. Now, some people then, I see them do a pole trade or a symmetrical triangle trade or any other type of setup, and they're using the 618 fib as their target. It's not, each setup can have its own type of targets and ways to use it. So in this case, pretty simple, the pole trade. Normally the distance that we covered to come into the pattern is what we will cover going out. So let's say for illustrative purposes on here, there's about, you see here, it says 369. So we'll round it to 370. Well, if I went on the other side, and let's say it breaks here, and I calculate 370, I'm going to go wherever, and you even while it's in the pole, you can prepare your target. And so then you do like this, something like that.
Is this a measured move?
It is a measured move. Whoops.
When you were saying there was a bull flag, would it matter if there's a bear flag? Because it's still accumulating.
You're not going to have a bear flag there.
Okay.
The only time you would have a bear flag would be like this, at the end of an impulse move up, like this, which is what we had on Bitcoin for the last few days after the $1,000 move on last Thursday. Right? That's what's called a tilted flag.
Mm-hmm.
It's not a bear flag. Well, it becomes a bear flag because it's tilted in the same direction as the trend. And eventually, those normally are reversal patterns.
Okay.
And guess why? Because a bull flag does what? Does it make the price more attractive or less attractive to buyers to continue the trend? More attractive. Now, if you do this here at the end of your up move, does it make more attractive or less?
Less.
You can find more sellers or buyers.
Sellers.
There you go. Which is why eventually those reverse. Now, the other thing that you can do, don't use that all by itself. Yeah, 80% of polls continue. What can you combine it with to increase your probability of success? Your RSI, your MACD, support and resistance, fibs, all those. But that's the poll trade. I'm going to try to find
the other one. What you called it, a tilted pole, if the tilt is the same direction.
Yeah, I call it a tilted flag.
Okay.
There's not really a good name for it. Really, you kind of have to explain it to people as it's a flag tilted in the same direction as the trend or the upcoming the move. So it's kind of awkward. I just call it a tilted flag.
So if on USD CAD right now I'm looking at, it looks like there's a downward flag right now.
Well, I broke it. It broke it a little bit earlier.
Because I think I saw the hook. Pretty sure.
It's hooking right now.
Yeah.
But I'm looking on a 4-hour though. So, but because it's clear there, I'll remove some old stuff on there.
What's CAD?
Canadian dollar.
Oh, okay. Oh, we're in 4X now. Okay.
Yeah, it just doesn't matter. It's all the same thing. That you get a lot clearer ones in Forex actually. So you see here, easy, right? Depends how you want to do it. You can use the wicks or not. The hard line may help you. See, that is a classic head fake. So see guys here, this is all one move, right? There's no pullback, there's nothing. It's all one leg. So that's your measured move. So if ever you were to break hook and go, which you have not yet, so even, and for those who tell me that if I would be tighter on the, like on my wick and whatever, use this anchor and cut this one and use this, I still don't have a hook and go, right? What does that do? If someone used a pull flag, normally you put your stop, like you're shorting in this case, so you're hoping it goes down. So you're selling the currency and you put your stop loss here. But what a lot of traders do, because they're not willing to take that risk, is they'll see the break. They'll use this line right away as a stop loss. So they'll get kicked into the trade because they'll use a pending order right on the break. They won't wait for the break hook and go. The market makers will go take the stop losses from the people that were trying to go long, who used the support line as their stop loss or just below. And then they'll kick the people in that didn't want to wait for confirmation and shorted the pair. And so they're killing two birds with one stone, and they come right back in. Perfect head fake. They made a lot of money with the dumb money. Dumb money is the traders that don't wait for the confirmation. Smart money went to take your lunch money is what it's called.
So right now, would it be the hook?
No, it's back in. Yeah, it hooked, but it never stopped to give you a go. So now you're back in your pattern.
Mm-hmm. Okay.
And
it would
usually,
have been a go if a red candle appeared. Oh.
yeah, if it would given you a bearish engulfing candle after this one here, like I'll zoom in. Like this one hooked and respected the line. So that was fine until this one happened.
Mm-hmm. Okay.
So if the third one, this one, would have been bearish and engulfed this complete candle. Now, this is on a 4-hour. So you see, even here, even on a 1-hour, we don't have it.
Mm-hmm.
We break, the next one comes back, we hook. No, there's no go, there's nothing. There's a go here, but it didn't hook yet.
So let's just say the engulfing, the green candle, and then after that one, there would have been a red candle going down. Would that been the hook right there?
Yeah, if this would have been the hook, and then you got a bearish engulfing, and we don't take any red candle. We need a powerful candlestick formation. Usually we use the engulfing candle. There's a few others that you can use. You'll get to know them as you go along. You don't need to know them right now.
Okay.
But usually what happens is if they're giving you a head fake this way, it's probably because they're going to break it this way. They're just going to fill orders here, make money, grabs those commissions, those spreads. And but the other thing is if you follow Forex, I don't know if you have your calendar open, but tomorrow is the biggest news of the week. And it's especially focused on the Canadian dollar because it's our Bank of Canada rate hike or no rate hike announcement.
What do you use for your news?
For a calendar or for news? There's a lot of news.
For calendar.
Calendar, I use Forex Factory and MyFX Book.
And what do you use for news, if you don't mind me asking?
Forex Live, CNBC. I do correlations between my charts.
Do you ever use investing.com?
Not really.
No. Okay.
I don't even need to check news to trade.
Yeah. I mean, it helps somewhat.
Most often, it will deter from your trading plan. It will
Yeah.
create uncertainty. It will fuck with your head. It will go against your plans. You start doubting yourself. Uh, there's no real need to trade news. All the news is in the chart. Like if you were to go paper trade anything, whether it's cryptos or forex or stocks, what are you gonna do, right? You're gonna go 1 year back in time, and you're gonna start practicing your setups and put on paper if you would have taken a trade or not. Do you go back and check all the news for 1 year ago, or you trade the technical analysis on the chart?
Yeah. Technical.
Yeah. And all the news that went on along that year or 1 year past is built into the chart. It made some moves up, some move downs, doesn't matter. The chart will speak to you and it will show you those events. And if you go back on a Forex chart, for example, and you go back further out in time, like I was doing the US yen, for example, the other day to show a new trader. Well, we scrolled back on the chart, and there's a few times I could say, okay, this is the US election. On the pounds, you can see Brexit. On the Swiss franc, you can see when they unpegged the Swiss franc from the US dollar, and so on and so forth. You can all see the major news, and the small ones are still within the correct structure of what you would do with technical analysis. So, yeah, I check news to understand market sentiment more than anything else, like big major macro changes in sentiment. I will check news like tomorrow. I'm going to check news. It's a rate hike announcement. It's a high impact news for the Canadian dollar. And at the same time tomorrow, on Wednesday, it's the crude oil inventory. And if you trade the Canadian dollar in any pair, you need to know what oil is doing. And the biggest news of the week for oil is crude oil inventories. So tomorrow is going to be a rock and roll day for the Canadian dollar. So it's very possible that they're bringing it back in to go higher.
That's probably why they did the accumulation.
The what?
The accumulation zone. That's probably why.
Why what?
There's an accumulation.
Oh, yeah. It's possible that they're pausing there because of the indecision and people not willing to take too much risk or too big positions before the news. Yeah, that's absolutely correct. Sometimes, too, what you'll see is you had a big move and people want to take off their profits and close their positions before a big news event. So sometimes it won't only do this, it'll even pull back a little bit to position themselves. And sometimes the market makers, if they even know what they kind of want to do after the news, they might pull it back to find more sellers. And then once the news hits, they sell it off. So there's many different ways to do it. But here we see a perfect example of why you wait for break, hook, and go. And that's another perfect pull trade. So guys, we would measure this move here into the top. And there's two ways to do it. You can either measure to the bottom of the flag and use that size. But if you use that size, when you break, you need to use it from the top of the flag. So I find it easier to just calculate my measured move from the top of the leg to the top of the flag. And then whenever it breaks, like here earlier, well, I need to see what that was. So about 200 pips. So 2 cents in the exchange rate. So if we would have broken for real here and had our hook and go and whatever, the target is 200 pips down, and that would be around here.
Mm-hmm.
So we already have a target, which would be about 123.60. on the exchange rate. So that's a perfect example of a pole trade, and those they're continuation patterns. So I don't think I had covered those with you too much. Even the not the old crew, but the crew that's been with me for a little bit here.
Hey, Larley, Julianne and Burger King have some questions in the chat. I don't know if you.
Okay. Oh, there you go. Sorry, I have a cold, guys.
You sound good, man. I wanna change Alexa to have your voice as the default voice.
Does it? Wow.
No, I said I'd like to change it.
Yeah. How do you know where to put stop loss to avoid head fake if you're not able to watch it for confirmation? If you can't wait for confirmation, you don't put the trade on. Julianne, you should know better than that. You're losing points. You were my champion today, earlier this morning, and now I think you're going back to vice champion.
Hey, she's asking on behalf of all the other people.
No, it's all right. No, I'm joking around, but look, if you are willing to take that risk and you know that it's going to cause more losing trades and you are willing to make that trade-off and you have a plan for how it's going to all work out in the end, like a trading plan, that even if you take those losing trades all the time, that somehow you'll make it work so that you're profitable long term, or you just take a small position instead of a big one when you can't confirm it, then do it. It's your trading. But if you want to avoid as much losers as possible, then you don't put it on. And what do we say, right? If you missed this one because you couldn't wait for confirmation and be there, well, and you miss it, so what? You miss it. There's trades every day, everywhere. There's 1,500 cryptocurrencies. Once you learn everything in here, you can go trade Forex. You can go trade stocks. There's so much to trade. And so what if you don't make a trade on one day? It's not a big deal. Whatever you don't lose is the same thing as making money. It's the same thing. Avoiding a losing trade is the same thing as the same exact effect on your overall trading portfolio in the run of time as a winning trade. And you know what? The worst part is that most people have a hard time dealing with losing trades. It affects your psychology. So you try to avoid them. So that's why we do it that way. Now, if you want to trade it, you can trade it. Now, have a plan to trade them anyways, and make sure that go paper trade them and see if you can still make money if you always take those, or if you end up losing money. Go try it out for a year on US CAD, for example, or on Bitcoin, whatever you want to trade. Go try it out on paper. I can trade like 100 pole trades in here by just going back in the past, and practicing, and I can gain experience so much quicker. But I've yet to see or hear somebody tell me that they do paper trading. I think a few, maybe.
I did on BitMEX for a little bit.
Right.
Uh-huh.
So, I mean, you could wait for live charts and live setups to gain your experience, or you could at least give yourself a head start and go in the past and see here. I can decide, okay, do I take a trade? No. Do I take a trade? No. I move candle by candle. Do I take a trade? No. Yes, I want to buy. Hit my trend wall. Okay. And so on and so forth. And I set my stop loss, my take profit. I decide if I want to get out of a trade. No, I don't want to get out. Still continuation. And now I don't have any indicators, whatever, blah, blah, blah. And I go like this. Do I get out? No. I'm going to aim for my heart line.
They should
Okay.
call it cursor trading.
I've reached my hard line. I'm out. I did this trade. Calculate my results. It was a winning trade. I put it in Excel. I put in my winning percentage, my winning amount, what my reward to risk was on this trade, what type of setup it was. I can even put comments as to why I entered the trade. Do you think you're going to get more? You can do this on the weekend on Forex while it's closed and it doesn't move. Whatever can help you practice these patterns and these types of trades. It doesn't matter what you practice on. Yes, after you've practiced and you've known the patterns and whatnot, you then want to practice it on the trading instrument you're gonna actually trade, because there are going to be some slight nuances. Not everything works or moves exactly the same way or with the exact same amplitude, right? Some Forex pairs, some move on average a cent a day and some move 2 cents a day. Now, if you think that everything moves a cent a day and you've seen a cent move in it, but it really can move 2, maybe you're going to get out too early, right? So there's nuances that you need to understand in different trading instruments, but whatever. But there's a lot of good that can come from paper trading, and you'll gain experience while not being able to lose money, and you'll gain experience much quicker. Now, you're not dealing with emotions, but at least you're practicing your patterns. You're getting to put trades on much quicker than waiting for live charts. And you practice your brain to see the patterns and yourself to go through the process of what you need to establish to take a trade professionally, like how to set your stop loss, calculate your reward to risk ratio, and you're not under pressure when you do it in those situations because nothing's moving. You're not actually, so when you practice it multiple times, when you get to do it, you're much quicker, you're much more accurate, make less mistakes, and you're more confident in your move. So you remember earlier, Namir, when you were asking, do you try to convince yourself sometimes that it's not breaking out? If you've seen enough of those and how they work, you'll be more confident that it's really doing what it's doing, and you'll be confident to push the button when it's time to push the button.
Cool. Is this what people mean when they say they're back testing a strategy?
Yes. Well, backtesting, there's programs that you'll put, for example, I want to buy every time something goes to below RSI 30. And I want to sell when it goes to over RSI, like overbought, right? And the computer will run that automatic strategy. If you would have followed those criterias to the T, what results would you have gotten? So there's, or if you were, let's say, to trade a MACD signal crossover, a moving average crossover, and you could program your settings for what you would have traded, and it does it for you over time, like in a matter of minutes, and calculates the statistics. But first of all, even if you get good results, finding a strategy with that, the problem is most humans don't replicate it exactly the same. And the strategy also kind of form fits to, or you tend to form fit to what already happened. So for example, if you backtest and you don't get great results with, let's say, a 3 and an 8 moving average, well, you're going to try a 5 and a 15. And then if the results are a little bit better, you might try a 10 and a 30 until you get something that works. But that could just be that you're form fitting it. You're finding the ultimate strategy for what already happened. Now, it can help, but it doesn't mean that that's how it's going to play out in the future. The computer or yourself just matched the strategy according to what already happened. So it's kind of a false test, if you wish. But yeah, there's 2 ways to do it. So back testing by paper trading yourself, and then like using a software to backtest a strategy that does it automatically. The other question, BK, is there an argument to be made that you are buying at the top when you trade a break, hook, and go? Would I be wrong thinking it may be better to buy at the bottom of a channel with many previous bounces off it, waiting for it to hit the top and buy the breakup? Well, okay, so gonna come back to my pole trade. Just give me a minute. Okay. Yeah, so here, if you were asking about that, BK, so yeah, some people will play within the pattern as well. Okay, but you can also wait for a test. Like now, some people will buy it right off the line. There's no perfect strategy. That's why you have to test things, try things out, do some statistics, check out what works, what doesn't. Some people that already do it will tell you what works most. If you want to listen to them and cut your learning time or your 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 pain time by half or by a lot more, listen to the ones that have already done all the mistakes and tried everything and have a successful way of doing it, or go and try everything yourself. Some people have to see it for themselves. They'll never believe it if it's coming from the mouth of somebody else, and that's okay. I understand that. But see here, you have a low, you have your two highs, you can establish the pattern with this tool. Now it so happens that this lines up perfectly, and then this one lines up perfectly, and you would have had that with 3 points. All right, I'll remove it, draw it again. What the fuck? Oh, my magnet's off, that's why. Why is it fucking crooked? It's slightly lower, yeah, I guess. See, it doesn't even make it there. See, that's the thing. If you only have this, and this happens, you don't know that you shouldn't be using this wick right now. You know that you can move it here once you do have that clear pivot point, which is a way that you could have entered at the bottom. Now, it's not exactly at the bottom, but this is a clear anchor point with 1, 2, 3, 4, 5, 6, 7 rejection wicks on the bottom. Do you think they want to turn it up? Yes. What did they do? They turned it up. Where did they go back? Right to the top. And then you can sell it again. Now, see, the reason you can take these trades, now they're more aggressive and you have to be much more nimble and know what you're doing. The reason you can take these trades is even if you enter like the break of this formation and your stop loss is somewhere just below the line because you can use that, and your target is just within the pattern. Oops. You still get a 2-to-1. So those trades, it means that you have a good reward to risk ratio. So each time you're going to win, you're going to make twice as much as if each time you're going to lose. That's what it means. So how many of these do you need to win in percentage terms to be break even? Someone go do the calculation.
Gotta grab a calculator.
Oh, I know the answer. I just want to put you through the exercise, but I appreciate if you're going to do it.
You're saying how many do you have to? Can you repeat the question?
What if you trade with always let's say this is a 2-to-1. I just want to start having you think of probabilities and ratios, because that's how a casino makes money. So if you are always a 2-to-1, so every time you win, you're going to make $2, and every time you lose, you're going to lose $1. What is your break-even percentage rate? How many trades do you need to win or to be right in this particular setup to be break-even? And for those that aren't doing it, try to do it or go through the exercise.
Was it 1 out of 3?
Yeah,
Yeah, 33%.
exactly. Right? So if you take a 1-to-1, you need to be 50% right all the time just to break even. That's not even making money. Okay? If you take a 2-to-1, you could be right 33% of the time and you'll still be break even. So you want to take trades that give you that edge that you don't have to be right all the time. And let's say, like, I know some of you have seen me do trades with 6, 7, 8, 9, 10-to-1 setups. Now guess what? Even if those would be low probability trades because there's such a great reward to risk ratio, I can afford to lose 90% of my trades on those types of setups and still break even. And if I put all the odds in my favor on top of that by doing technical analysis and using my indicators and confluence of indicators to create a good setup, well, guess what? If I manage to take a 10-to-1 all the time and I manage to have a 50-50 win rate ratio, am I going to make a lot of money? Yes. Yes, yes, yes. And if I can do that consistently, all I need to do after that is make bigger trades. And if you don't have the trading capital, go get leverage. But then by then, you know you have something that works. You're not trading on leverage just to try to make more money when you're still losing money, which is just going to amplify the problem. And guess what? If you can prove to people you have, for example, you can make 10 or 20% a month consistently, week in, week out, month in, month out, a year or two, you will be able to go to anyone that wants to make money or invest and take their money and invest it and make money for yourself as well with their own money. You give them 10% per year guaranteed, and then you trade at 10% per month. So you don't need to make those 500% trades all the time and be 90% right. Like some of you guys think that they need certainty to take a trade. No, we just look for setups that have good risk to reward. We look for high probability setups with our confluence of indicators that we can use. That's all we can do as traders. Then if we've planned the trade, we've done all we could to put the odds in our favor, and it still doesn't work out, that's part of the game. And if you do that, you will become successful. Anthony, I've been paper trading live charts for the past few months because I've been so busy and just been practicing. Good. If your life doesn't allow you to be a trader right now, it's okay. You have the rest of your life to become a trader and then make money at it. Don't try to hurry it up. If you have a job right now and you don't like it or you like it, but you eventually want to make the transition, take your time. Right now you have the luxury to have something that pays your bills and may even allow you to put more money aside to have more trading capital to increases your chances of success when you actually make the transition. So there's no hurry to do that either. do it right instead of having to do it multiple times and go back to work. 1 to 3 BK. I'm not sure. Oh, maybe you were answering my question. Okay. Am I missing? I had a 2.36 question above that one too. I'm not sure what you mean, Julianne. Is it really just unlucky if you played breakout and it resists at the 236? Well, Julianne, that you're probably talking about a wedge trade. Guess what? If you break out of a wedge and your 236 fib is right there, and you're going to chase the breakout and not wait for the hook, or for it to test that and come back a little bit, then you're asking for it. But otherwise, it's most often not going to stop. If you have your fib done correctly and you're playing out the correct pattern, it's not just you know how we said earlier, some people draw their falling wedges the wrong way, and then it breaks out sideways and it just goes sideways. Well, those are instances where it just goes up a little bit, might hit your 236, and then just move sideways or go down and not move anyways. But that's probably because it wasn't really a falling wedge, or you didn't have all the correct indications for a good move, or maybe it was just something in the markets that happened that it didn't work. It's not unlucky. It's gonna happen. Don't call it luck. It's gonna happen. It has nothing to do with luck or unlucky. Some trades are not gonna go to target. Some trades are gonna turn right back around. Some break hook and goes are gonna fail. Some pulls are gonna fail. Everything's gonna fail. Put that in your head. So, what did I say yesterday to Alex, to 10x, or today maybe? We don't deal in certainty. We deal in probability. That's what trading is. So whenever you're asking for questions and you want us to confirm where we're going in Bitcoin, or if it's absolutely going to go up or down or break this pattern or break that, we can't tell you 100% of anything. We can only tell you what the chart is telling us or what's more likely to happen. That's all we can do. So I hope that answers your question. Every day is a miracle. Thinkorswim platform with TD Ameritrade has paper trading. Yes. You guys, even if you would want to practice like Forex, every Forex broker has a demo offering. Free. You download the platform. They give you 100,000 fake dollars, and you trade. Have fun. Make mistakes. Fuck up your orders. Try everything you want to try. Overtrade. Whatever. Now, it's not going to be the same thing as trying out to trade, but do that for a while. Try to build success. Once you've done that, then move on to a real account. Take really, really small positions, even if it doesn't mean a lot of money for now. Start dealing with real emotions. Practice that. Once you've mastered that, then move on to slightly bigger trades. Take the right amount of percentage risk of your overall total portfolio. Once you've doubled your account, or you move your account up, and you can take a little bit more risk, take more risk, and so on and so forth.
And don't you think when you're first starting out, it's like if you're just really new to trading in general, just set up with like $20 or $100, like you said before, and only put in that amount until you start seeing significant gains. Because why would you want to risk anything more when you're being a new trader?
Yeah, so that's the thing. Like sometimes I see people, I've been learning for a month, and now I can take bigger trades. Are you consistently winning money right now? No, if you haven't proven it, then even if you have learned some stuff, doesn't mean you can do it. And I could sit here with any one of you and teach you charting for a full week. You'd know pretty much everything that I know. You'd have to go practice because you need to learn to see it easily. But I could teach you all the techniques. Look, I gave you an example the other day of an exact professional trading plan from somebody that I used to trade with. Okay, I'll show it to you again. This is his exact trading plan. All he does is trade engulfing candles on the 4-hour chart with the trend. That's all he does. Okay, he has an exact plan, where to enter. Now there's some slight nuances and you need to be able to read some certain things, but it's still pretty straightforward. And it works. Look at this, benefits of this method. It takes me 15 minutes to go through the charts every 4 hours, after lots of practice, of course. I can do that too. But I've been doing this for 15 years. When you enter, you almost always have at least a 1-to-1 to the first target, just the first target. He targets much more than that. Paper trading has shown a high win rate because you have stacked the deck in your favor. Do you think he went to practice his plan on paper trading before doing it for real? Yes. And he's done it afterwards to even convince himself even more. Look at this here. Most important point, I think. Because it's mechanical and there's specific criterias, there is no place for subjectivity. So he can't, if he's disciplined and he follows his business plan, the market always makes the decision on when to get in and get out. Your brain can't stand in the way. So you, little trader, you can't fuck it up. That's what it means. Your brain and your indecision and your uncertainty and your lack of confidence or overconfidence can't fuck it up if you follow the criterias. Now, if you write down the criterias and you don't follow them, then you should fire yourself. When you're a trader, you're your own boss. If you go work at some place, you break the rules all the time, guess what's going to happen to you? They're going to kick you to the curb. Well, the same thing in trading. If you put a plan together that you know that works and you don't follow it, fire yourself. Fire yourself for a week. Fire yourself for a month. Go to demo trading until you can do it and prove that you can do it. But that's what it means. But what I wanted to come to point out by looking at this is that I could teach you all the technicals that you need to do this. And you could leave today with this trading plan, and even if other people are successful with it, doesn't mean that you will. It might not fit your own personality. You might not have patience. Look, the cons. Many people don't have the discipline to wait for the trade. They got to push the button. Push, push, push. Click, click, click. I need to make a trade. I need to make money. And then the other downfall here, which also a lot of people won't be willing to do to have a successful trading life, even if that's all they have to do, is you have to wake up at 11 Eastern time if you're not in bed by then, and then 3 a.m. That's London session that's starting, because you get a candle every 4 hours. That's it. And look at here. Yeah, but you had a card just before this one. A card is an engulfing candle, another word for it. And that was a losing trade. Oh my gosh, a losing trade. Yes, you will have losing trades, but he only risks 1% of his portfolio on any one trade. How many trades in a row does he need to lose to blow his account? A lot. Needs to be the worst trader in the world to blow his account if he follows the rules. Now, doesn't matter what you pick. You can pick a moving average crossover strategy. You can pick poles. You can pick falling wedges. You can be a breakout, a reversal trader. Doesn't matter. You will still need to be disciplined and follow the plan. So when I tell you do break, hook, and go, do the pole, look at your indicators, wait for this, wait for that, do your reward to risk ratio, not below certain levels if you want to increase your chances, all those are to stack the odds in your favor. If you don't want to do them, that's up to you. I can't do it for you. So, yeah, and that's one of the reasons, guys, like I focus a lot on trading psychology. Alex, what's the first video that I told you to go watch when you came to me yesterday? You still there? Oh, he's gone.
Well, I've been watching the motivational videos, and they're really,
Yeah.
really informational.
Yep. And sometimes it's motivation that you need to either do the work that you need to practice and prepare, or just be at your trading desk diligently. Sometimes it's just the mind, like to improve your mindset, improving your confidence, improving your whatever it is. And then yesterday I create a separate one just for trading psychology that's going to have specifically to do with trading itself. And I posted a new series of Mark Douglas, and they're separated in 4, so it's more digestible, smaller parts instead of the 7-hour video. But even the 7-hour video, all of you should have watched it a few times. But I know most of you haven't sat through the full 7 hours that it took to watch that video. And that's okay. That's your choice. It's your trading journey. It's your life. I can't force anyone to do it, but there is a reason. I tell everybody, and that's my first video recommendation when it comes to trading psychology. There's a reason 2 of his books are in my 3 trading recommendations for books. If you want to do it, it's going to help you. I can guarantee you that. If you don't want to do it, then that's fine. That's up to you. So yeah. Now, do we have still? So divergences. Well, Alex wanted to do it. He's gone, and I think everybody else in here. Is everybody else in here comfortable with divergences? And don't be shy if you're not.
I'm still a little confused on a few
Okay.
things, but I don't know if that rent. I don't want to be the.
Oh, it's okay. And it
doesn't.
doesn't take that long to explain anyways. So, but is there anything in particular that you're confused about that you know of, or?
Yeah, I get kind of confused, like drawing a line in the actual histogram, like how to
Okay.
actually use that for.
Like you don't really, first of all, you don't really need to draw a line. It sometimes helps you to see it. But if you're having trouble with it, maybe one thing that you should do is go paper trade that, just that, right? Like 300 of finding divergences. And if you want, send me pictures. Like put a folder together of TradingView charts. Each time you think you've found a divergence, identify the swing highs and swing lows you're using and the hubs in the histogram, and say, okay, here's what I think is a bearish or a bullish divergence, and send me 20 of those. If you fail on 18, then that means you still have work to do, or maybe I need to re-explain it to you. If you get a lot of them, then that's fine, and you'll be used to seeing them after that. let's see here. I'm just trying to find a good example.
And the other thing I never quite could grasp is how to look at them in different time frames to use for, making a prediction.
Yeah, so I mean, of course, like especially like the RSI, it'll become oversold much quicker on a smaller time frame versus a bigger time frame. I'll start first maybe with the MACD here. So you see my chart. So another way to kind of make it easier to see it first. Oops, that's not really nice though. Anyways, I'll try to. So you see this zone here, right?
Yeah.
So to get there, we make an impulse move down, right? We break whatever formation there is here. We clearly make it there really quickly. Now, if I draw a line around that area, or I try to line up the MACD, see, that's the easiest ways to kind of line it up at first, is to put a vertical line. It's tedious, but that's how you know where you're lined up. Now you get used to seeing.
I was wondering where all those lines were on your charts. Okay.
Right.
Yeah.
I don't do it often. I just do it to show this, but
Yeah. Okay.
so that's how you can identify, okay, so now I'm here in price and I'm making this low on my MACD, right? Showing a lot of bearish momentum. Now we make another leg lower and now I make a swing low here, right? And on my MACD, come on. On my MACD, see how it lines up here with this hump? Well, clearly we're making a lower low on the price and we're making a higher low on the histogram, right? Do you see that one?
Yes.
Okay.
I think I've
So-
been looking at these things the entirely wrong way now.
Okay.
Yeah.
What were you doing, you think?
I was looking at the trend of the MACD, not really looking at the absolute
Yeah.
position of it as much.
So and then there's more complicated ways to do them, but the simplest way is if this is all you had and you didn't have this portion here.
Yeah.
This can indicate that it's near the end of its downtrend, right? It's trying to make like it's making lower lows, but it doesn't show the same bearish momentum as what you had here. So that's a divergence.
Right. Okay.
If they would be moving in correlation, if the MACD would be making lower lows and the price would be making lower lows, we'd be calling this convergence. So the two things that are supposed to be moving together and following each other move together. That's convergence. When they do not move together and move in opposite directions or do two separate things, then that's divergence. So we get it here. Now we see a small bounce. Now we make another low, right here. Now guess what? This becomes a bit tricky because you almost don't have a hump down here, right? So that means that you have to go right into that. And is this a higher low? Yeah, it's actually a higher low. It's even positive, right? So that's now you're getting your second divergence in a row, right? And now you're starting to from here to here. If you look at the RSI, we're starting to get oversold here, but we don't have yet divergence, and we're not way oversold. Now here we make it oversold, but if somebody would buy just off of that and not be very nimble with their trading, they'd take this trade, think they're a genius, and then they would do this and kill them.
Fuck yeah. Okay.
Right?
Yeah.
You didn't wait for a divergence. Now, you had your first divergence on the MACD here. Did you have it on the RSI? No. Now, people will ask me, can you trade one without the other? Yes, you can. Will you have more losing trades? Yes. Do you want more losing trades? No. If the answer is yes for you, then take those trades. They're less probable. When you have the two lining up, which I'll show you here in a second, here we get our second MACD divergence. And now here, if we compare the two RSI lows, we now have a higher low on the RSI and a second higher low on our MACD. So now we have two divergences. And guess what? We make a nice little move. If you played just this channel on Forex, this is could be a nice little move, nice little chunk of money.
Mm-hmm.
And so that's your divergence. Here you have one on both the RSI and the MACD. I'll try to zoom in a little bit. Except it's just that it didn't go to overbought, right? But see here, clear double top, right? You see these?
Mm-hmm.
This top, I can put arrows.
Yeah, the second one's even wicks up a little bit higher too.
Yeah, that too. But even if they would be even,
Uh-huh.
you see this hump and this hump? This
Yeah.
first hump is lined up right with my first top. It's higher than this one. If this is equal, or as you say, this tried to push up a little bit higher, but even if they would be perfectly equal, if this is going down and making a lower low when this is not, then it is diverging. It is bearish divergence in this case. And you have it on the RSI as well.
Mm-hmm.
Now, the only reason you would have to put a line is if you can't see it to the eye. You just want to kind of illustrate it for yourself and prove that it's going down. Like this. That's all. You don't need to do trends on, and that's all you do. You don't take 3 or 4 back unless they're always like making a lower low, a lower low, a lower low, and you're getting like here where we're making a divergence, another divergence, and sometimes it'll be 3 humps on the bottom.
Mm-hmm.
They won't even cross above.
So if they're not telling you anything, you don't have to go back and include them.
No, and see here, for example, I don't take those, and the other thing too is if you're looking for a reversal to the upside, you're not looking at what's above the line. You're looking at your humps, your swing lows. You want to compare swing lows, so you take the swing lows on the histogram, not the highs.
Mm-hmm.
When it's going to make a reversal.
Yeah, so we have another example here. Like, those are all over the place, and you could have traded this channel up and down perfectly with just those and candlestick formations. Here, double top, bearish engulfing, tweezer top. You enter, boom, you go here. Get a clear anchor point with 1, 2, 3, 5, 6 that we said earlier, rejection wicks. Go long. You get your first hump on the MACD. And first high on your RSI, you're still good. And you didn't make it back to your line, which you now have because of those 2 points. Guess what? Then you make the high, you touch the line, you get a bearish engulfing candle, you get divergence on both your RSI and your MACD. Guess what? You're out of your long. You made money again.
So you want the MACD and the RSI to, in a way, convergent with each other, but both divergent from the.
Just it doesn't have to be, but you have more working in your favor.
Right.
If they are. And then the other story is try to get them on both time frames. If they can be showing it to you on a 1 hour and a 4 hour, even more powerful. The morning I called 6,000 bottom on Bitcoin on Hyped on Crypto back in February, on February 6th. That was the first morning that I was seeing oversold on all 1 hour, 4 hour daily with divergences all over the place. Bullish engulfing candle on the 1 hour off our bottom trend wall. So I took all those together and I said, well, that's all I can get, right? I can't get better than that. So if it can't get better than that, then I'm willing to call a bottom. And that's what I did. But it's not me being a genius or having a crystal ball. It's just letting my tools talk to me and be willing to wait for the right signs to come together. So yeah, so divergences. So we saw them all here. Pretty simple. Does that clarify it a bit?
Yeah. Is there a way? Can we go back to?
Yeah, if you have some that you want to check.
Can we just look at that last trade that we were looking at on Bitcoin and
Yeah.
kind of solidify that?
Now, it doesn't mean that every trade that we'll do, because if you're looking for divergences, you're going to look for counter trend trades. We're going to look for reversal trades,
Yeah.
right? Because you have to make it to one extreme and then look for turnaround, right?
Right.
So if you're playing flags or pull flags like we saw earlier, and those are most often continuation patterns, are you going to use that divergence? No.
No. Yeah. Okay.
No. What you're going to do is you're going to make sure that you're not already, like, let's say you have a pull to the upside. Or let's say here on Bitcoin, we had our first move down. This here is a bear flag. Whatever, it's not straight, but that's a bear flag. Now, measured move should be this move down into the flag. We should reach on the way out. Now, what is it doing now? It broke a little bit, giving us another smaller bear flag, which could be another continuation. Now, all I want to make sure here is that I'm not oversold or we're getting a divergence already or whatever. But in this case, it's tricky.
Yeah.
Because if I go here, give me just a sec. Okay. Yeah, so we kind of have a swing low here, and we have a lower low here. Now, this works, right? These two. Because see here, we're making a lower low, but our MACD is lower than around here. So this is tricky because this is a hump, but it's above. That's where most people get confused. And then the other thing that gets confusing in this case is if you compare it to this swing low, like this one versus this one, and you skip this one, then this would be divergence. And our RSI too is starting to get close to oversold, right? So what happens? Do you want to chase a short right now? No. Did we test the break of our flag? No. So what do? Wait for the pullback. The pullback is your friend. It will give you a better entry price than if you chased it down here or even at the end of this candle. So if it comes all the way back here, and what can you add to know where it possibly can stop on the pullback, or when you can confirm that it's stopped? Well, let's add a fib. Fib your leg down. We're at the 382. How often do we stop at the 382? Do we stop there often or not?
all the time, right?
38%.
What?
I don't know.
Yeah, isn't it the what? Isn't it the 23 that's more rare?
Yeah.
Okay.
So most often we make it to the 50 and the 618, right? Those are our two most common fibs. Nick, did you have a question? I see you have your hand up.
Yeah. With this, is there some? Oh, can you zoom out real quick? I just want to see something.
Is what?
Is the mini the green candles going up? Would that be a bear flag too?
Yeah, it's a bear flag right now.
Yeah, like a
As
mini
soon-
one.
As soon as it moves up a little bit more, it's not going to be a bear flag anymore.
How come?
How come? Because that's not how a bear flag is formed.
Huh. Okay.
A flag is a parallel
Yeah.
channel. Okay,
Oh.
like this. Now, this still fits, but where do you anchor it now? You don't even have anchor points right now to do it. Guys, is this an anchor point?
No.
No, we saw it earlier, right? Now, the only anchor points I have in here on the bottom are this one and this one. Now, if I do that, what kind of flag is that going to give me? Come on.
Oh.
Okay, this.
There.
Something, and this is not even, I don't even have an anchor point. This is not an anchor point right now because it still hasn't formed a pivot or even an anchor point. So how I can't draw. So unless I can drop it to a 10-minute, there I can draw a flag. See? Anchor point. 5-candle formation with 2 to the left lower, 2 to the right lower. Same thing here. Same thing here. Got one here. Got one here.
Isn't it just saying go? No, never mind.
And you're resistant to go to the 10-minute just because it gives you less accurate, right?
Yeah, well, a 10-minute pattern, or 10-minute candles, anything under 10-minute has less significance.
Okay.
Like a bank traders don't even look at anything below a 1 hour. Now, in Forex, just to give you an example, 90% of the markets or the volume in Forex is controlled by 15 banks in the world. 30% is controlled by banks, Citibank and Deutsche Bank. So if you want to know what the markets are doing and where they're headed, what do you want to learn to understand? What the big boys are doing. They couldn't care less what you do on a 5-minute or a 10-minute. They don't even look below 1 hour. So when they're creating trend structures and symmetry in the markets, and when they need to do a square up, bye Julianne. When they need to do a square up, they're not checking in a 10-minute. They chart on a 4 hour and they enter on a 1 hour. It's the same thing. I hear a lot of people, oh, I have a trend here, and they're on the 30-minute. You don't have trends on a 30-minute. Trends are designed on a 4 hour. Now, can you have channels or waves or legs on lower time frames? Yes. Can you draw your trend on a 4 hour and then drop to a 1 hour and still see the same trend with just more touches? Yes. That's not where they look to create the structure and drive the market to those areas. So if you want to, like, for all those who think the markets are manipulated, you are right. Now you can understand how they work, and then you will just have to tag along. But if you want to just say, oh, act as a victim, and oh, everything's manipulated, and my broker's against me, and he took my stop, and he did this, and he did, and everybody's out to get you, that's not it. First of all, in trading, I make $1, somebody's losing $1. I'm trading against you, you're trading against me. It's like that everywhere. You're trading against the banks are trading against you. So come to grips with that, and it'll help you understand that you're not a victim if somebody takes your money. Everybody, like if 50 traders win today, all equal sizes, somebody has to lose on the other side. It's either one big trader that lost on the other side, or it's another 50 traders that lost the equal amounts. Now, once you accept that, you just need to understand the market dynamics, why markets do what they do, and who's driving the markets. If us in our little Discord can't put a dent in the market, then who do you want to follow, and who do you want to understand what they do if you want to follow the markets and understand what they're doing? The big boys, the traders, the floor traders, the big traders, the banks, and that's who establishes the market. So those guys don't trade below a 1 hour. So can you trade below a 1 hour and make money? Yes. Can you scalp? Yes, and make money? Yes, some people do it. But if you want to put your odds in your favor, understand that the market is not necessarily out to get you. It's just normal that everybody else is also trying to make money. And if they can exploit your inexperience and your errors that you don't want to fix, or that you don't know you need to fix, then they're going to do it.
I had a good question. So if a candle closes above the 38 fib level, it wouldn't be a bear flag anymore.
It doesn't have to do with the fib. It has to do with your parallel channel.
Oh.
Now, it doesn't mean that you couldn't adjust it, right? Like I could also draw it like this with my 2 anchor points on the bottom instead of using the tops, and I can use this. Right? There's different ways, and the hard line helps me prove that this might be better. So that's okay. But the way I see it is you have to put the pieces of the puzzle together. Now, we're on a 10-minute. That's not where we chart. I just wanted to show that maybe on the 10-minute you could draw the flag a little bit easier. On the 1 hour, it doesn't look like the flag anymore. It looks like a pullback. You see the reversal. It looks like a fish hook.
Yeah.
Right? Now, if that's what it starts to look at, now guess what? We have an RSI divergence from here compared to here. Same with our MACD. We just talked about it. And we did 2 candles like this without testing our breakout. What do you think is going to happen?
Pull back.
We're going to pull back. And pullbacks are good, guys, if you understand that they're going to happen. If you don't enter your short here, you're happy that it comes here. You get a way better price. By the time we get back to this line, it's going to be higher than what it was when we left here. And guess what? I didn't put it in yet, but there's a square up here. That's a square up. So we didn't touch on square up, so we might as well do that. That's the last thing we had to touch on for tonight.
Nice.
So, and by the way, I try to keep a color scheme, right? So if you follow my colors, you'll get to learn what they mean on the chart. My fibs have a certain meaning. My fib extensions. My blue lines are always like individual trend lines. My big parallel channels will be blue. My support lines, my PSRs, my previous support and resistance lines, will be magenta, kind of a light purple, and so on and so forth. My square ups I keep red, and normally I'll write square up. Is somebody trying to talk?
Yeah. So would you say we'll probably get a push higher and then create another low?
Well, I don't know. I can only tell you that once we get there.
Okay, and current
Because
price.
let's say we get there, and by the time we get there, we have no momentum, but we're overbought. And let's say we stop right at the 618, and I see a bearish candle. Well, maybe then I can tell you that we're making higher lows. Or lower lows, we're going to go back down. And look at this. Our targets I remove these fibs here. Like when I do this here for my pullback, my tool is built to give us targets for if we do go back down. It does it automatically. I programmed it that way.
Mm.
Okay. And if ever we were to reverse it and go back up, we have the same exact proportional targets on the way up. Where we also have a left behind. I don't know why this stayed there, but this is a square up from here. So square ups, okay? They're consolidation areas where there's accumulation and distribution. The market makers, the big boys, the banks are trading everybody's orders and filling everybody that wants to trade up and down, buy and sell area, consolidation. Now, we get a bearish engulfing candle with tweezer tops, and basically after that, we drop drastically and suddenly. Now, you see there's no price action near that, like on the right side of that candle. That means if they got caught with positions on their books that they weren't able to offload, because understand that market makers, they don't make money by making a 10% move in Bitcoin. They make money by taking everybody's trades and making a 0.01% on every trade that exists in the world. That's how they make their money. So if they get caught with positions that they weren't able to offload in the market and take off their books, then they're stuck with it, and they're not going to take, if it goes down 5% or whatever the case might be, they're not going to take that loss. They can't afford to do that. Now, what are they going to try to do eventually is bring it back here. That's what we call the square up. So until it is squared up, this is an unsquared candle. See, there's nothing here to give them an opportunity to get out. If we would have had a quick pullback and then drop down, they could have gotten out. If we had a wick on this candle coming right back, they could have gotten out. We don't have that. Same thing here. Consolidate, break, boom, all of a sudden. By the way, we had a square up here. They filled it. They filled it by dropping there on the way down. So anywhere where you see a sudden impulse move, there's no candle on the right-hand side to get them the opportunity. If they're stuck with positions, to offload those off their books, they come back. Now, does it mean they're going to come back right away? No. It could take them 2 weeks. And there's no necessarily order. All other things being equal, there's no order. Like here, we had one here before doing this, and we had one here. Well, they said, we're going to do this one first. And now we have one here, and we have one here. Very likely that we could do this and go finish up this one too. But we also have one at the bottom, I think. All right. Oh, yeah. Yeah, our big square up from last Thursday. Can you imagine how many positions were stuck there? And guess what? For those who ask why the fucking short squeeze happened last Thursday, it's no secret, okay? And it's not manipulation, it's not anything else. It's just a market dynamic at play, and I'll explain. We had a rising wedge. We played that rising wedge. Some of us traded this. Okay? Look here, perfect example, okay? Of how I draw my trend. Okay? I can use this wick. 2 candles on the left, 2 candles on the right are lower. That's an anchor point. Then, do I use this wick or do I use this one? Now, if I use this one, I only have how many touches?
2.
2. Now, if I come a little bit within and I use this one, it gets me how many touches more? 2 more, 4 touches. Is this line better? Yes. Same thing here. If I use this wick here, It gives me a parallel channel and it's wrong and it's way late.
Yeah, yeah.
So I'm willing to, I'm not cutting everything. I'm not form fitting to try to get the breakout earlier. I'm using this, but this gives me 2 extra touches.
Sometimes
4
do you
touches.
include bull trapped and bear trapped regions?
Yes. Doesn't need to be a wick. Sometimes it's a full 2 candles that closed outside. As long as it all makes sense and it's improving the proof of whatever you're drawing. So here, and I think Julianne caught that trade because here, or no, that maybe that was later. But again, here, we see clear signs. They make it up here. They're close to getting overbought. Action wicks. Make it a bit further down. They find new buyers. Try again to push it higher. Rejection wick again. Make it a little bit more down. Find some new buyers. Try to push it up again. Triple top. Bearish engulfing candle. Close in reverse. They're done. They're getting out. That's it. And you can often see that because the big boys here, if you understand candlesticks and how they enter the market, they entered once, twice, and 3 times. So how many times are they going to get out? Once, twice, and 3 times. That's how it works. That's why you see head and shoulders. That's how they're formed. So here we broke down and we had a square up to cover right here. So what happened that morning is that we had an insane amount of shorts, the record-breaking short amounts apparently from what I've heard from people. And then what did they do? Somebody started buying it back up, or maybe some people closed their profits. It just so happened that, of course, we had made it to a 50% fib. There we go. Tried to break it, didn't break it, came right back in, right next to the next fib. Pretty normal movement. But if you're right there and people are chasing it down, and you have record shorts and people way too leveraged, as soon as it starts moving up, you start to get short squeezed. So people that didn't have enough margin in their account, they get liquidated. And what does that do? They have to use the money that's left in their account in equity, turn around and go back on the market and buy Bitcoin to be able to give it to their broker to close their short. Now, what does that do? That creates buying pressure because all the shorts have to go back on the market and find some Bitcoin to buy to give it to their broker to close their short. So that's why I say to the people that I talked to about this already, no new money was coming in. It was all short squeeze, people getting liquidated, so the money gets taken to their account and given to the broker, and the position gets closed. But there's no new money coming in. So the short squeeze, maybe it didn't happen here. Maybe it's because they wanted to square it up. Square up was here. So maybe the market makers caused the pullback to a square up. And as you can also notice, we didn't have a hook to the break of our pattern. So maybe that's simply what was happening. And as that happened, and we had a record amount of short squeeze started to happen. And guess what? This is what happens to a short squeeze when there's no sellers left. So when everybody's already short, record amount of shorts, and everybody starts getting liquidated, that's what happens. This in 30 minutes. Right? And so then it's not really a sustainable move, first of all, and it's not a real move to start with. So what happens? We get a bull flag. People get home that night and they start hearing the news. Oh, Bitcoin is up $1,000, right? So people start getting in because dumb money does that. They chase the move. They enter afterwards, right? They chase the performance instead of anticipating. So yes, we get another move. And then the next day, all headlines are Bitcoin's going up again, blah, 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 new targets, 25,000, 250,000. And so we get another bull flag and we make it up again. 2 bearish engulfing candles, we break down. We had a wedge of some sort there too, whatever. And then for a few days, it's still all positive news. But there's no real momentum, a real push. Look at your MACD. Never even made it to back to zero after the first push. It went straight to negative, never came back, even throughout all those days. So at the bottom, where we started the push Thursday, we have a square up. So to those who ask me why I think that it could get there, because we have a huge square up to complete.
Do they always retrace or trend up to back to a square up?
They often do. It's rare that they'll leave a square up there, but like I said, it could be 2 weeks, it could be a month.
Yeah.
But you'll see if you go practice those on a chart, if you go do 300 tomorrow, you will see how often they come. Sometimes they do it quickly, sometimes not so much. And you'll see not only sometimes do they take their time, but the surprising factor is how accurate they stop on it, at least temporarily, when they do come back. So you can see that they know that it's there. It's not just random. And go find those in the charts everywhere. I've been showing square ups to you on Bitcoin for the last month, maybe. And we don't have many that are incomplete. We have a few up top because lately we've been going down. But once we make an uptrend, we'll cover all those.
A square up is basically just a period of consolidation. It can be a short period.
It's not a period of consolidation. It's a period of impulse move after a period of consolidation that left brokers with open positions on their books that they need to offset. So they need to come back. They need to come back to be able to close that position at a price that doesn't kill their accounts.
So after an impulse move up or down.
Yeah. Because if it happens gradually, they don't need to come offset it. They had plenty of chances. Right here, for example. Well, we go up, we start turning around, but they have plenty of time, and every time they can take it off. There's no. But look here, we have one here. Look, I'll give you an example of how accurate it is. That's the last candle that's next to each other, and then we get a sudden move. We turn around. Where do we go? Right to the fucking square up, to the wick. I could go on for days. Like, there's one here. Where do we stop? Wick. Like is it
always good to check them on at least the 1 hour?
Yes, that's where they're most accurate.
Yeah.
Because guess what? Where did the big boys chart?
1 hour.
There you go.
Like
and sometimes you'll see them at a 4 hour. The problem is sometimes they're there, sometimes they're not. Because sometimes you'll drop it to a 1 hour, and within the four candles that were creating the 4 hour candle, they had the opportunity to close it. Now, in this case, they didn't. We still had a 1 hour square up there, right? But you can go in the charts and practice those. They're all over the place, and just see if they come back and how accurate they stop on most of them. Like, look, like all over the place. This is your consolidation area top. Go back to the top, sudden move right to it in one candle. They're all over the place, especially in Bitcoin, because it seems to always consolidate and then have a sudden move. It does that often.
I have a question. If you go back to the short squeeze that happened, you can with the big drop that went down, wouldn't that be a flagpole, and then it created a bear flag, and then
where
so
I'm at the short squeeze here.
Okay, yeah. So then you see, like, to the left of it, the big red candle.
Here?
No, the like keep going, like
There.
yeah, that one.
Yeah. Yeah.
And then if it dropped and then created a flag.
Yeah, but that's not a flag. That's a rising wedge. Now, it doesn't
Well,
really matter because they're both bearish. But the problem is you're not gonna have a trading opportunity on a flag, whereas you would if you draw this as a flag, you can't take that trade.
like a bear flag, but
But what?
a bear flag.
That is a bear flag.
Yeah, but like before the red candle.
Here?
No. Back with the push up, the red candle that brought it down and then it went way back up. Right there, yeah.
Yes.
Before that candle appeared there, would it still be considered a bear flag?
I'm not sure what you mean.
Can you draw on the screen? Maybe.
Yeah, I got it. Yeah. So, okay. That was basically if that was basically the bear flag before that that the red candle closed,
Yeah.
that brought the price down.
Yeah, but that's what I'm saying. I'm telling you what you're asking about. It's just you're confusing a bear flag with a wedge. Right now, you're using the bear flag term or flag too loosely.
Because like
So I'll show you what I mean. So you could draw this is a flag. You use how do you draw your flags?
okay, so I'm just trying
No,
to
but which tool do you use?
the trend lines.
There you go. So that's wrong. You're going to make mistakes. So the tool to use is the parallel channel tool.
Mm-hmm.
That is a tool that you click 1, 2. So if you have your line on top and then you just slide up or down on the anchor point and then you draw. And then your lines are parallel. They're going in the same exact angle.
Okay.
That's what you use to form. So the problem with drawing trend lines, and some analysts on YouTube do it, and we know some of them, but that's not right. Because if you draw a trend line, which you should do, but if you do this, that's what I did earlier, right?
Mm-hmm.
If you do this the correct way, you're using the right anchor points, you have many touches, it's clean, that's not a bear flag. It's also a bearish continuation pattern in this case, but it's a wedge. It's a wedge because you see how the lines tighten up near the end? That's a wedge.
Yeah.
So,
But it couldn't be considered a bear flag. It would be considered a falling wedge. I mean
a rising wedge.
Yeah, rising wedge.
Yep.
Okay.
It's still a consolidation pattern. The semantics of it's just that if you draw it correctly as a flag, as I did earlier, you can't take that break because you're not going to be broken your pattern.
Yeah,
right?
that's what. Because I thought it was a bear flag, and like, I didn't, because like bear flags usually mean reversal. It's gonna go down. So I didn't understand why it went up.
Yeah. Well, the thing is first of
bear
all,
flag is a continuation though. Anyway, isn't it?
yes, but he meant
Yeah.
the reversal in the opposite direction of the bear flag. Yeah.
Oh, okay.
Anyways, but the other thing that you were missing in this case is, for example, is your fibs. You didn't fit. See, the thing is, what's the target of a wedge? The 50 or the 618 pullback. Where did we go? We made it to the 50 and we got a close in reverse. They changed the direction of the market. So if you had that piece of information, even if you did take the short and had the correct wedge pattern drawn, you could have known, okay, I reached the 50 and they're saying they might be turning. Your RSI got almost oversold and it's turning too. Maybe I move my stop loss to break even. And then if you would have understood square ups, maybe you could have said, okay, this is a square up, so maybe they're coming to get the square up. Do I want to stay in this? Now, after that, first of all, you shouldn't be in the trade anyways. Or if your stop loss was in, it should have been above the last time your wedge. So worst case, you wouldn't have had a big loss anyways if you traded it correctly.
Okay. And where your mouse is right now, that would be the square up right there.
No, the square up is right here.
Right there, where it went down.
Yeah, but it's not only that it goes down, it's that there's nothing on the right-hand side for them to give them an opportunity in the next candle to get out of the positions. Now, it's hard to see now because there is something here because they came back and they closed the square up. But when this happened, there was nothing here at that time. And same thing here. Look, there's one here, right? Consolidation area, bearish engulfing, and then just drop like a rock. No area here at all for them to have an exit area if they got stuck with positions from here. So what happened? And we had a few of those on the way up that were left from before even that I had outlined, but I take them off the screen as they're complete. So I think we had one around here and we had one a little bit higher, but it wasn't only because they were doing square ups at that point. It was just a short squeeze, snowballing effect.
So most
every short squeeze that was getting liquidated was causing more buying pressure, and that higher buying pressure was causing more people to get liquidated, and so on and so forth until everybody was gone.
Okay. And so most likely we would have to come back to that square up.
Yep. Okay. But the thing is could it happen that they leave a square up behind? Yeah, it's a possibility. Everything can happen. There's nothing that's 100%. The other thing, now we have a square up here and we have a square up here. And we still have square ups way above from our bigger downtrend. But so are they going to come here and close that square up? I'm going to remove a few here because we have too much. Let's see. Yeah, so are they going to come complete these while they're closed? Or this one would make a lot of sense, right? Because it would make sense with the pullback. It wouldn't go past the 786, which is still a decent pullback, and then it could test the line it broke through, and then it could make another move down. Now, depends too if we get way overbought by then, if we try to make it up to this square up. But eventually, normally they complete them all. More specific than that, I can't be. But you pair them with all the other indicators. So yeah,
thanks
square
for going
ups.
into detail on that.
What?
Thanks for going into detail on that. I mean, it
Pleasure,
seems
man.
like a good way to pair it up with the RSI and MACD. I just never fully looked into it.
It's just, well, you won't see that anywhere.
Mm-hmm.
I was lucky enough that I trained with, well, Scott that trains and does some of the videos for Pro Eye Traders.
Mm-hmm.
He used to go around the world and train floor traders. Traders.
Yeah.
He also writes articles sometimes for Forex Live or FX.com. I don't know. But because he went into those banks and understands how they work, then he can teach us that stuff.
Yeah.
Now, most people that were not privy to that information, you try to find another square up video online on YouTube. I don't think you will.
Yeah.
The ProAct one.
Yeah.
And so it's just something that I was lucky that I learned it, and because I learned it, now I can teach it to you, and you're lucky that you learned it. And go on any other Discord, you will never hear about a square up unless they learned it from us.
But you did say there was a video from the guy on YouTube?
Yeah, no, I put it on our channel.
Yeah, I remember seeing it.
Yeah.
I need to.
It's the first one in educational.
Mm-hmm.
But yeah.
Nice.
But yeah, like going into detail and explaining it and showing it, I think is helps cement it for most people compared to the 6-minute video.
Yeah.
But I mean, and it's not all his videos that are shorter, but there's some that are short, and sometimes that's good. Like today, like we touched on the pole trades earlier, but I also posted a video from Scott and Proact explaining pole trade and why it's probably the best first trade for newbies. It's easy to identify. The rules are simple. High probability setup. Good reward to risk normally. So, and then that's without incorporating RSI, because sometimes you'll take a pole continuation, a pole flag, and if your RSI is way overbought and you take it anyways, well, maybe that one you're reducing your risk of success. So if you combine it with other tools, then your 80% becomes even greater. And if you take 2-to-1s or 3-to-1 setups, you're bound to make money. And all you need to do is perfect that. Like there's some people that I know who make a living just trading poles. That's all they do.
Because it's you said those are the 80%, success.
Well, 80% they continue in the same direction that they
Okay.
came in. That's so. But then if you add the break hook and go, that's going to reduce false breakouts.
Mm-hmm.
If you use divergence or candlestick reading, that'll help you. If you use PSRs, if you use your fib targets, all those things, they all increase your.
Yeah.
But the main strategy, some people make money just doing that. But that's
So they
another.
trade poles. What do you mean? Like they just trade the like parallel channels?
That's
or-
the only strategy and setup they use.
Oh, okay.
And that's a problem that I see in Discords and all over the trading world
Mhm.
with newer traders is they want to learn every fucking strategy in the books.
Yeah, it's kind of
And-
like do what you're good at and just stick
And,
to
and
it.
look, I was a culprit of doing that too for many years.
Mhm.
And I blew some accounts. That's that. Most traders that end up being successful in making this a living, they have done that because that's the only way you really learn,
Yeah,
right?
that's when it really counts. You're losing.
But if you're lucky enough to not have to go through that, and to maybe have someone that to tell you that that's what's going to happen if you don't focus,
Yeah.
and you're willing to listen, then you're gonna probably cut your learning journey or your journey to becoming a successful trader maybe by half. Because if for example you start trading and you have 10 grand and you blow it all, and it took you 10 years to accumulate that 10 grand,
Oh no.
well, guess what? It's gonna take another while before you can trade again.
Yeah, that's gonna hurt.
But people think it needs to be complicated and that they need to have Elliott wave,
Yeah, I was just about to
cipher
say.
patterns, and all the
Elliott
tools in the books, and have 10 different strategies. No, you need a few good ones that you really master, and I mean really master, and you plan the trade, and you trade the plan.
Yeah. Also another thing that's really helped for me is I've just been trading Bitcoin for the last 3 months.
Yes,
The first 3
yes,
months. I
same
had,
thing.
like 50 coins, and it's like my head was spinning. So
Same thing, and guess what? You can't focus on 50 coins and do it all right at the same time. That's the same thing. For example, when Mitch started doing all the altcoins on his live streams, do you think he was really being detailed on his analysis and being thorough when he was doing 70 coins in an evening? And I'm not trying to shit on Mitch, but anybody that would try to do that is not going to be able to be as thorough as somebody that spends the evening analyzing Bitcoin
Right.
or any other coin that you want to trade. But yeah, the most successful forex traders that I traded with, or stock traders for that matter, uh, the I think the most insane forex trader I saw ever and that I traded with traded the pound yen and the pound New Zealand, and at first he only traded the pound yen, and you know what he did before starting to trade the pound yen? For 8 months, he studied it. He went for 8 months without taking a trade. Something that nobody in here will ever do. I can guarantee you that. If somebody does it, record it, track your journey, and then send it to me. I'll promote you. But he did that for 8 months, paper trading, finding out how it moves, how many percentage or dollar moves it does every day on average. When it's going up, does it tend to go up with pull flags, or is it A, B, like 1, 2, 3, 4, 5 wave patterns? When it comes down, does it come down gradually, or does it come down quickly? All those things. And this guy knows the pound yen, and he could save his life with the pound yen if he had to. But that's all he does. Now, could he trade anything else? Yes, but it's going to take away from his focus. You only have so much time, so much energy. It's the same thing. I have a new trader here, and he's trading stocks. He comes every morning with me now, live at the house. And he came here the first morning. He's following 3 chat rooms from 3 different traders.
Oh, God.
They're trying to scalp on a short-term time frame. He's getting Twitter alerts on his phone. He's trying to look at charts. How can you trade?
Yeah.
And can you follow, like, you can't follow all the news and understand all those companies and understanding why they're going up or why they're going down or how they're supposed to move and what's happening. So and he doesn't even have one specific strategy that he wants to use. No trading plan, nothing.
Yeah.
Now, I'm going to be able to fix that. But if you can realize for yourself, or if you can listen to whoever tells you you need to focus,
Yeah, for sure.
then you're going to cut your learning time by a lot. And like I said earlier, you don't need to make crazy, to get really successful at trading, it doesn't need to be crazy returns, or all you need to do is find something that works, it's consistent, and that produces just enough returns so that it becomes enticing for you or somebody else to put more money with your trading, and then you do bigger size. That's all you have to do. This is one of the only job or money-making opportunities that you will be able to make the same effort and just change the size of your trade, make more money.
Yeah, like
Try to find a job. Like Julianne's real estate, she works in the real estate market. Well, guess what? Unless you own the real estate firm and you have real estate agents working underneath you,
you're your own broker.
on which you make a commission for each commission they make.
Yeah.
Well, if you're a real estate agent, each house you sell, you make a commission. Well, guess what? Other than economies of scale with maybe marketing and whatnot, you work a certain amount of effort, you sell a house. If you want to sell more houses, you put more effort or more money into your marketing. Well, in trading, you don't have to do that. You get good at polls, you figure out that you're 80% right, and that you make 10% every week, and you can do it for 50 weeks in a row. Guess what? Just put more money, or find somebody to put more money with you. That's all you have to do. But people don't want to take people don't want to take the time to do the work or be satisfied with one strategy. They need to learn it all. They need to know everything. And look, it's not bad to learn, but right now, while you're still not profitable, it's taken away from your chances of being successful. I know it's counterintuitive, but a lot of trading is counterintuitive. When you're looking to buy, you should probably sell, and when it feels good to sell, you should probably be looking at buying, right? But
Just like our euro, our euro yen.
yes, it's pulling back to the falling wedge.
Yeah.
The rising wedge. Sorry. Yeah. Yeah. Good example, guys. Perfect example. Look at why you wait for the pullback. Broke once, didn't get the hook and go. Broke a second time, no real hook. But I mean, we're aggressive. We can manage trades. We scale in, scale out. So we got in. I think I got in a scout position. But if it stops here and turns right back down, guess what? I'm gonna take that trade again. I'm gonna add to it because my first one is still in. Look, 786 pullback, perfect. It turns around. We're gonna get overbought soon. We're gonna be close to triple top. But somebody looks at that trade and they're like, "Holy fuck, my trade's upside down. I'm gonna close it." And right as you close it, turns around in your direction. And
I'm
that's
still in too.
Oh yeah. All the yens turned around. All the pounds turned around, all the yens. That's the thing. Like nothing moves straight up or straight down. The pullback is your friend.
If it was just that easy.
Yeah.
So would you say it's going to reach that square up there or that previous high?
Where here on the chart?
Yes.
There's no square up anymore.
Okay.
Square up was covered here.
Oh,
But
okay.
good catch though.
Okay.
And it's close. It's not a big area, right?
Mm-hmm.
But yeah.
I see.
Yeah, they're going to be all over the place.
What was the big news for the Canadian?
CAD tomorrow is the interest rate hike decision.
Mm.
A lot of big stuff going on tomorrow.
Yeah, crude oil inventory, so that's going to affect oil, which is going to affect the dollar.
Gas is already up in Oregon.
Yep. Well, it had quite a run up last week, and if we look at where's my crude oil? Remove all the fucking drawings. Yeah. Since here it's been going up.
Wow.
Well, basically, it made lows last year of $25 a barrel, and now we're at 66.
Oh, this is per barrel. Okay.
Yeah. But from here, basically, that's where we stopped making lower lows the last time. And I could probably draw a fib channel on there. Well, it's not a fib channel, our trend channel, sorry. See, this, I'll give you an example. Okay, so if you just draw lines on here, you don't have this tool, you're not going to cut these out, these head fakes. And what you're going to do, instead of using this anchor point, which is your full back leg, this whole leg, to establish the width of your trend. Now, do I make it back to the top? No. But because I have my trend zones, my zone 3 line, it respects it twice. Now, why do I know that's the right width as well? Does my heart line get tested? My heart line is my middle line, for those who don't know. Tested here, 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 tested here. You tired of hearing me tested here?
I think it pretty much respects it.
Right? So, and then do I get my touches other than this one that are clean? Yes. 1 close here, 2, 3, 4, 5, 6. So if you go and you just try to trend this here, and then it breaks out to the upside, you're going to miss out. Or when you think this is it, and it drops back down here, you're missing 50% of your trend. Now, the other thing that some people would have done is this. Where's this fucking dot? Like this. Well, now you think that this is the top of your trend. So if ever we do make another push higher, and you think the line's coming here, and you short it, and you get fucked before because it goes there. So that's why we use a trend. That's why we draw it on a 4-hour. Now, plenty of nice pullbacks within that. I can show you many. Come on, magnet. I would need to zoom in a bit. It's pretty close. Yeah, between the 50 and the 618. Guess what? Stop making lower lows. Start making lower lows. Come on, magnet. Fuck. Guess what? Right on the fucking dot. 4-hour candle. 786. This fuck. If these are waves, 1, 2, long fucking ass 3, 4, and this could be 5. But and see here, make it to the hard line, overbought. What do? Do a pullback to give it some more room, and reload to try to make it through, and then go test the top of the trend wall that we didn't touch a second time ever since the start. So yeah, that's oil. So that's why oil is going up. It's more expensive. So yeah. I think we covered everything. We covered anchor points, the rev tonight. We covered pole trades, break hook and go again, square ups, divergence, reversal, wedges. Did we cover anything else? Why you should focus on a few things at a time. Probabilities, reward to risk ratio. Is a good, and we went an hour and a half longer than I thought. And hopefully this is still being recorded. I don't know. Yeah, it is.
Yeah, are you gonna like upload this to something or
Yeah, I don't know where, but
make a Blu-ray DVD?
start selling a Blu-ray of me
Always
swearing all night.
upload it to DTube. We can upload it to YouTube. We can do a lot of things.
Nice.
Yeah. But I had the sniffles all night and I swore all night. So I don't know if we're going to put that on YouTube, but as long as the information is still good, I don't mind putting it up for you guys. Yeah, so and like for example, Code a few minutes ago, I don't know if he's still with us, but he said he was going to head out and thanks for everything, but okay, he's still there. But something that he pointed out, see, I'm sure I missed a lot along the way, even if you're listening, but I definitely feel like I got a ton too. So the thing is, like these, when we do big sessions like this, when we cover 5, 6 different things, and most of those are new to you, or I go quickly, don't expect to retain all this in one night. It is impossible. So we like these types of sessions, Scott at PROAC used to call those fire hose sessions, where we just like fucking drain you with water, right? We hose you down, we throw everything at you, and then you have to walk away, digest that for a little bit, and then you take piece by piece, you go practice it for yourself. How many times? 300 times. 300. And then you get to master one thing: pole trade, divergence, square ups, engulfing candles, whatever you want to practice. But that's how it's done. So if you count how many things you need to learn, how many different patterns, how many strategies, how many everything, and if you do, and that's if you do it every day. But if you practice one thing one day and you do 300, that's going to take you a while, a few hours. And then you take the next day off to let your brain retain that information and digest it. And then the next day you can come back and do another. And like I said, that's if you eat this stuff up, right? It's if you don't get tired. It's if you are willing to work all the time. It's a lot of work. And even if you do that, if there's 30 different things to learn, that's 60 days of straight nonstop work and then one day rest. So, and that's not you demo trading. That's not you then trading with smaller real money. That's not you then moving to real money, making mistakes, dealing with your trading psychology. So when you come to us, we're going to help you. We're going to get you there if you give it time and if you work hard. But it's and I think it's I don't know if he's still here, Alex or whatever. He was new yesterday, and he said, "What can I do in 30 days?" or something like that. And I'm like, well, if you think you're going to become a trader in 30 days, you are kidding yourself. I just can't put it any other way.
Some of the best traders in the world it took them at least 10 years.
Yeah, it's like the rule that they have. They say, like, to be an expert, and we mean a real expert at anything, you need to put in 10,000 hours. And it's not 10,000 hours of fooling around in a Discord talking nonsense chart or whatever you learn from people that don't know what they're doing. It's really going through the correct material and then doing the work and practicing it, making the mistakes, blowing some accounts, all those things that every successful trader or almost everybody has to go through. What? Oh, I think it was just background or.
Oh yeah, sorry, that was my wife telling
All right, it's all
her
right.
trading plan.
It's all right. Yeah, so I hope that doesn't discourage you. It's just being honest and straightforward with you. It's not that it's not doable. I found I love trading. I love charting. I love learning about it. So to me, and that also goes to, it's like I think Elon Musk and Steve Jobs said that, right? That if you wouldn't be crazy and a little bit to follow the types of projects that they did, or if you wouldn't love it enough, you wouldn't go through all the things that they go through, they put themselves through, or the work that they put themselves through, if you didn't love it. I saw an interview last week that Elon Musk, they're having production issues. The guy is 3 times over making multi-billion dollar companies. He's a multi-millionaire. He's one of the smartest guys in the world, one of the best executors of businesses. And they were having trouble in their assembly lines and their production facility, their big factory. And he is now spending his nights directly at the production facility, not in an office, directly there. And they showed him sleeping on the floor or on the little fucking hard couch that he had in the boardroom. This is Elon Musk. and he's still going at it. But when you look at documentaries and it looks all rosy that he's built all those nice companies and he always has success, you don't see the work behind it and the craziness that goes into it. The same thing for me. Like, been doing this for 15 years. Looks easy now to read a chart. I can do it in 2 minutes now, but I practiced it for fucking 10 years before that. And I still learn.
So
And it's the
your
same thing
main,
for Rev.
Your main mentor or your guy you learned from was Scott from ProAct Traders.
He's not my main one because I think I only met Scott 2-3 years ago.
Mm-hmm.
But he was definitely the best teacher I've ever had.
Yeah.
Not only for the material, because his material and approach was the best, and he had all sorts of stuff that I had never seen elsewhere, and I had done a bunch of courses. I had done some TradeSmart University, some MTI, some Winner's Edge trading, and some of those were good. Winner's Edge was good. TradeSmart University was good. Good teachers. But Scott, material way above the rest. But not only that, I loved his teaching style. No nonsense, straightforward, upbeat, funny. So it was just a great but they mostly do Forex. But I saw this Sunday, because every week he kind of does like an email with like a few setups of the week that he thinks are going to be good. And normally those are all in Forex. But for the first time this week, he charted long-term charts of cryptos. So, but yeah, no. And if ever, it's an expensive course. If ever you want to take the course, but they also offer like a live trading room. I don't participate in it anymore. I don't really need it, but if it could still be beneficial. It's fun to trade with others. Yeah, if ever you guys want to do the free trial, I can probably set you up with that. I think they give away a 7 or 10 day free trial where you can actually go with them in their live trading rooms twice a day. But that's another thing. Whether their trading rooms is during London session. Now, London session is at what time, Rev?
3 a.m. Eastern.
There you go.
Cool.
So
So
what does that mean for most people? Or a lot of them. They need to get up early.
That's why Rev's ass is up early right now.
And that's why Rev sometimes disappears for the rest of the day. In the afternoon or in the evening. Yes.
Is somebody looking for me?
No. I was just
sorta.
Well, sorry about that, guys.
But we said you were sleeping, and not to wake you.
No, it's just because we had Michael, who's a guy that I know. He's from my region, my neck of the woods, and I invited him. But he's mostly, I think, Forex, maybe a bit of stocks. I'm not sure, but he's been trading for around 10 years or learning for 10 years, and I invited him over, and he wasn't used to Discord, so he kept using the @ sign to respond to somebody.
Oh, that was what was jingling my shit.
Yes. So that's what I said at some point. I think I'll stop recording, guys, right now, and then we can still talk if you want for a bit, but so that it doesn't get useless for anybody that just wants the material. Let's see. Stop recording.
Naeem Malabetti here.